Good morning, everybody. How's everyone doing today? Already got you guys posting trades in the classroom. I like it. So we're going to be busy today. That's what I'm talking about. Um, it's Friday, guys. It is the last day of May. Can you believe it? Hey, good morning, Jeffrey and Rob. GWC. Like it. We got the cool crew in. Tongue in cheek, I said earlier in the room, I should probably check news every day, make sure that I don't get run over. If you were watching the market at 8:30 a.m., it got a little kooky, didn't it? It became untradeable for me. I'm a pretty good chart reader, guys. It was too fast. So every morning before I do anything, first cup of coffee, charts are loading, study yesterday's trades, and I come to forexfactory.com/calendar. There's a link for you. And I check news. I just want to know what's going on. And I'm going to tell you something. I don't care. It doesn't matter to me what the core PCE price index is. I've got zero stake in the Chicago PMI. But what I do know is that somebody does. Somebody out there with deep pockets may react to that news. And we saw it yesterday. It's hard to tell which way they're going to go. They might have this plan that says, oh my gosh, if the news is wonderful, let's sell it off and drive the price down. And you're like, whoa, that doesn't make sense. It should go up. So I never know what they're going to do. So what I do is I stay out of the market. I choose to not trade when news is printing. You may make the same choice, totally up to you. I'm not going to force you. And guys, let's get into it. Everything we're going to do, everything, it's coming from the education page. We're going to take a lot of pictures today. A lot of pictures today. So I put a little note in there. If you don't have your capture software open yet, guys, and if you never posted in the room, I want you to open it up. We're going to go through how to do it. Make sure that you're comfortable with it. Because pictures are how we're going to communicate, guys. Pictures are how we're going to talk. You can type in the room, good morning, hey, how are you, what was that? But really, when you drop a picture, that's where the magic happens. And initially, there's not a lot of pictures to put in. It's every trade that you take, but if you have a question, you've got to put it in too. We're going to talk this morning. I'm going to go to the glossary of common terms. This is a great spot. If you're one of my engineer people and you need to know what creates a one-to-one, go check it out. There's the recipe. It has nothing to do with whether or not you can be successful with the market or with the software, but some people like to know. I couldn't care less. The less information, I think the better. The less I have to think about, the less I have to focus on, the less that's running through this cavernous melon of mine, the easier trading becomes, guys. Can everyone hear me? Just want to make sure. Okay, cool. Thank you. From the glossary of common terms, we're going to talk about the high probability trend trade, guys. This is my first hour every week, every day. Every day we talk about the high probability trend trade. Why? Well, it's a trade that typically wins 70 to 80% of the time. It's a trade that creates confidence, guys. Never underestimate confidence. It's going to be a huge factor because when you trust the trade that you're in, you're going to hold for bigger moves. When you trust the indicators telling you something, you're going to know when it's appropriate to manage aggressively and when you can really kind of let that thing spread its legs or wings or whatever. Sorry, that was the wrong term. Spread its wings. Get its running legs, right? So the high probability trend trade is going to teach you to read your indicators. It's going to teach you to understand what the market is telling you. And I'm going to say it one more time, just because I may not have said it enough. If you really focus on this trade, give it 20 days. Don't worry about the other trades. Don't worry about the other opportunities to make money. Don't worry about whether or not your simulator is positive or negative. Focus on the advantages of the high probability trend trade, and it's going to turn you into a chart reader. And chart reading is about 90% of your day. 90% of your day, you're going to wait for advantages. 10% of your day, you're actually going to trade. So you guys that are in here for 6 hours every day, right? What is that, 360 minutes? 36 minutes. 36 minutes trading, maybe in that 6 hours. Good morning, Gary. Good morning, Erla. Um, Gary, hope you're feeling well, brother. So, what does that mean? That means that we're not really traders, are we? We're professional waiters. We are professional hand sitters. We are the people that will do nothing when there's nothing to do. And if you develop this mentality early on, it's going to pay huge dividends. So, once you are a chart reader, once you understand the very basic concepts of the high probability trend trade, you try to not outthink them. If you're not looking for the trades, but rather the advantages, guys, you're going to understand pretty quickly where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. You will understand all of this through the high probability trend trade, and once you have this skill set, nobody can ever take that away from you. So you'll use this, you'll use your chart reading, and you'll find so many more opportunities out there. But you've got to learn the basics first. Trust me on this one. So what are the basics, right? Um, the high probability trend trade. How do you learn them the fastest? Post in the room. Drop pictures in the room. If you take a trade, win, lose, or draw, put it in the room. Annotate the charts. Tell me what you see, what you think, what you feel, and we'll talk about every annotation to make sure that you're reading your indicators correctly. And then the second half is I want you to use the spreadsheet that Nexgen gave you guys. There's a spreadsheet that's included with the download. It shows up in your Nexgen Study Picks folder. I actually give you mine every day because every day I update my folder. You should too, or my spreadsheet. There's 4 tabs on the spreadsheet, guys. There is the client trade section. So for you newer folks, I want you to take this weekend and just click on all these links. Commit some looks to memory. There's your favorite looks where you're going to put all of your pictures as you develop your own trading plan. This is the most overlooked, underutilized, and probably the most important thing. This is the high probability trend trade rules tab, guys, and this is the 3 rules in green, what they look like. This is your task for the first 20 days, is become comfortable with these ideas. And I'm going to tell you right now, strong triggers every one of you will have in the first day. Termination conditions, having a clear path is going to take you a few days of study, because once you have momentum, you're going to try to go straight to the entry. Trust me on this one. So we're going to break it down. This is where you're going to be able to take a lot of pictures. We're going to do this today. We're going to fill this thing up today. And then there's a copy of your tracking, guys. This is where you have to put your pictures. This is where every trade that you take, you want to drop it in here. You want to talk about what you saw, how you felt. There's a notes section for the feedback. But the most important thing about this page is not just filling it up, but going back and studying it. So what did you do yesterday, right? Yesterday I took a trade, guys, and I shouldn't have taken it. I took it directly into a termination condition. And I said, man, this area should break. There's that one phrase that costs me money every time. It should, I think, it might, I hope. All of those guys are money-sucking leeches in the trading world. Traded directly into it, lost the trade. So this morning, I had to wake up and I had to look at that trade and I had to say to myself, man, Mark, you teach this every day. Why on earth did you form an opinion? Today, let's not do that. Today, let's focus on what worked. Let's focus on what made me feel easy and relaxed, and avoid these things that feel forced and don't work. In this little study every morning, guys, it's going to set you up for the day. It is going to prepare you, and it's going to accelerate the learning, because what you're doing is recognizing patterns in the market that are bringing you success. But more importantly, you're going to recognize patterns in yourself that may be taking that success from you. Everybody has a thing. Everybody has a thing that sets them back just a little bit. For some of you, it may be entries. For some of you, it might be trading in determination conditions. For some of you, it might be fighting the trend. But if you post in the room, kid you not, you give me 10 pictures of trades you take, I'm going to have your thing nailed. I'm going to know exactly what your thing is. And then you and I are going to work together to overcome whatever obstacles are in front of you guys. So post in the room, track your real-time performance in that spreadsheet. We're going to learn the rules for when it's okay to trade. Guys, everything is rules. Why do we trade rules? So this high probability trend trade, guys, and let me tell you, Nexgen's been teaching people to trade almost for 30 years. This high probability trend trade is a trade that typically wins 70 to 80% of the time. How do we know that? Because it has been back tested historically, because it has been traded real time, because it has been absolutely run through the ringer. And after probably thousands of pictures, 70 to 80% was the outcome. 70 to 80% was the win percentage. So what does that mean? That means that if I focus on one trade and I take that trade 100 times, I'm going to win probably 70 to 80 of them, and I'm going to lose 20 to 30. But in the end result, with a little bit of a very even mediocre management, I should be in the green. I should be in the black, right? Because it wins more than it loses. And that's the goal, guys, is having a statistical advantage every time you pull the trigger. So we're going to study the statistical advantages. We're going to study the advantages the software provide. Initially, you're going to use them to take the high probability trend trade, and ultimately, you're going to create your own trading plan based on your ability to read the indicators. So we're going to learn the most basic rules that turn you into a chart reader. You're going to simulate, you're going to practice, and you're going to tell yourself, hey, it's okay to make mistakes. It's all right to not be good at this a week in or 2 weeks in. I had someone tell me yesterday that they were 2 weeks in and felt like they were spinning their wheels or like they'd taken a step back. Guys, I'm going to tell you right now, 2 weeks is not a long time. Most of you went to college, I think. And in 2 weeks into college, were you pissed off that you weren't an architect yet? And 2 weeks into med school, were you mad that you weren't doing open heart surgery? No. You had realistic expectations for yourself. But for whatever reason, people get the software, get on the demo, and they believe they feel entitled to be 100% successful and profitable within the first month, even without doing any work at all. So, guys, be realistic. We're going to learn some patterns. I'm going to show you how to keep it really, really easy. But give yourself a little bit of grace with these mistakes. Share them in the room and let's learn how to fix them. Don't hide them and don't beat yourself up. Your worth has nothing to do with your ability to trade. So keep posting those pictures. And then we're going to simplify a lot, guys. We're going to talk about the high probability trend trade. The high probability trend trade is literally 2 charts and 3 rules. 3 advantages creating a trade. You have to learn the looks so they become easy. How are we going to learn the looks? You're going to take a metric ton of pictures. And when the market isn't moving, you're going to see these pictures and you're going to be like, oh my gosh, this really isn't hard to dissect with nothing going on. Let me commit this look of momentum to memory. Let me commit this look of a clear path to memory. Let me commit what it looks like to take the correct entry to memory. And then when you are in the market and that market is moving, you know exactly what you're looking for, guys. And that's what we do here is we take so many pictures that it becomes easy. We're going to simplify. It's only 2 charts. There's a large chart and a small chart. There's a big and a little. Numbers don't matter. Doesn't matter what it is, guys. The large chart is going to define direction, momentum, and areas. The large chart is going to get 66% of the work done. Your first 2 rules for the high probability trend trade happen on the first chart, on the large chart. And even more so, they come to be on the most current bar. Like the first bar is going to define direction, momentum, and areas. How easy is that, right? And then once we have that, good morning, JW. We're going to turn to a smaller, faster chart. And this is the part that gets people. Large chart gives you the green light to take a trade, to look for an entry. Small chart is where the entry happens. This small chart is going to refine what is a very broad stroke of a brush on the large chart. And by doing this, you're going to be able to pinpoint where the market is most likely to continue. You're going to be able to take that entry with confidence. It's going to allow you to reduce your risk, and it's going to allow you to maximize your profit potential. And that's what rule number 3 initially is going to do for you. It's going to put you into the market at the right spot. With a little bit of study and a little bit of practice, you may adjust your entry points, but momentum and a clear path, this is going to be a constant, guys, for the entirety of your trading career. So 3 rules. Each rule provides an advantage. It's 3 advantages that create a trade. And this is the key, guys. Once you start ditching one of these advantages, you're no longer in a high probability trend trade scenario. So if your large chart doesn't have strong triggers, rule number 1, well then you don't have momentum. And no matter how much you want that trade to win, you are already down one advantage. And termination conditions, likely to stop areas. Guys, if they're in front of you, you don't have a clear path. So I want you guys to start speaking to yourself in terms of advantages. Every time you look at your chart, do I have odds favorable momentum? Do I have a clear path? And if the answer is yes, you're going to find your entry area. Initially, I'm going to give you a recipe that uses that refinement chart to get you in at the best of the best spot. But your practice, you're going to find some stuff, guys. You're going to find some trades that don't look anything like what I teach in this room, but your time with patterns and repetition and taking those pictures is going to create this awareness of what your indicators are telling you, and you will develop your own plan. Trust me, I've seen it years and years. People do this. But everything starts on the large chart. Strong triggers, guys. Strong triggers give me the advantage of momentum. The only way I can have it, and we're going to do something a little different today. I'm not going to go through all my slides. Guys, I created a chart here, and I took all my indicators off of it. And I'm going to take a picture of this, and I'm going to show you guys exactly what it means to have strong triggers. And it's really not a difficult concept. We're going to use this picture right here, guys, for everything. So let me snap that picture. Strong triggers. Can everybody see the picture okay? We good? If my background is red, remember we said that the large chart would define momentum. If my background is red, the market is going down. The only thing I should be doing is looking for rules met for shorts. And then, of course, what goes down must go up, right? So if my background is green on the large chart, then the trend is up, and I'm looking for rules to be met for high probability trend trades long. Guys, this little trick right here is going to keep you from fighting stuff just right from the get-go. Next, I'm looking for strong triggers, and I'm going to show you how easy this is. So the solid lines are small triggers. The dashed lines are large triggers. In a downtrend, everything has to be red. Smalls are red, large are red. They need to be wide and angled in the direction of the trend. Guys, it's this space. Let me do a different color arrow. It's this space that's created between the triggers. It lets me know that the odds are favorable for the market to continue down. So let's annotate it. In a downtrend, smalls below large, space between the two. That's your strong trigger, guys. And when I have strong triggers, the market is likely to push down. When I have strong triggers, it can break key areas. And when I have strong triggers, what I'm going to do is I'm going to look to sell Fibonacci resistance on a smaller, faster chart. It looks like a tail or a wick. We'll get to that, Pete, as soon as we talk about entries, I promise. And the tail or the wick is going to become your highest probability trend trade, guys. This is going to become your best of the best entry for that trend trade. So what goes down must go up. What goes up must come down, guys. In a uptrend, separation between the small and large, the space between the two lets me know that the odds are favorable for the market to continue up. We're going to call it odds favorable momentum all day long. Hey, Pete, I want you to pay super close attention when we talk about entries, because all these questions are going to be answered, but I don't want to get ahead of it yet. I don't want to get ahead of it yet. Is that cool? I promise you, I got you, my friend. So guys, odds favorable momentum, strong triggers. It's pretty easy to recognize. Smalls above the large, large or wide, angled in the direction of the trend. This is the best of the best time to buy Fibonacci support. This is a look that lets me know that the odds are favorable for the market to continue up. Guys, this strong trigger look will even cover some of the mistakes that we love to make as new users. These tails form on the large chart, but these are retracements on the small chart. Remember, we're going to use a refinement chart to take that one bar and really break it down to the best of the best spot. You're going to pinpoint where this tail is most likely to continue using a smaller, faster chart. You're going to pinpoint where this tail is likely to continue using a smaller, faster chart. But odds favorable momentum, guys, this sets the tone. This is rule number one. It doesn't happen all day. Eventually, those small triggers return to the large triggers, guys. And when they work their way inside of the large triggers, you've lost momentum. And anything can happen up or down. I love the words, guys. Odds favorable, anything can happen. So there's a life cycle. Best of the best, strongest, strong triggers. Let's sell Fibonacci resistance. Let's find that best of the best entry. When the smalls start to work inside, you're going to notice that the trend is slowing a little bit, and you're going to have to incorporate that chart reading, make sure everything agrees for a trade, impart a little bit of management on it. And then if you end up with those anything can happen triggers, guys, if you choose to take a trade without the advantage of momentum, you're going to have to manage it well. You're going to have to look for changes on a smaller, faster chart to give you the heads up. And guys, when those weak triggers hit areas, these areas can stop the market. And these are what we call termination conditions. Good morning, user. And termination conditions are rule number two. But first I want to ask, is everybody cool with the idea of momentum? Guys, this is crude oil right now, and I took everything off of this chart. Separation between the small and large. Guys, this is the easiest one. Separation between the small and the large. Your advantage runs from separation to return. This is the area we're looking for the rules to be met for high probability trend trades long. Your advantage runs from separation until these come back together, and your advantage is right there, the best of the best, guys. Embrace this one. This makes life easy. I'm going to back this up. And I'm going to show you too. This is pretty cool. I fabricated these lines. And as we go into rule number two, you're going to be pretty amazed at how even the lines that I drop on there, the consistency that they have. So rule number two says don't trade into a termination condition. Don't trade into an area that may stop the market. Remember, you're going to understand this really simple recipe. The areas that can stop the market, guys, lines on the large chart, easiest way to say it. Well, Mark, how is divergence printed? Who cares? If it prints, that's a line on the large chart. Same with resistance, yellow 1-to-1s, blue support, and even these mid bands. Hey, no worries. Morgan, I felt this emptiness in my heart. Now I know what it was. Cool. Good to have you back. It's Friday. We're going to have some fun today. Guys, these lines can cause trouble. These lines are where the people that move the market are making decisions. This is where buyers buy and sellers sell. This is where fights happen. This is where untradeable bounces occur. So you're going to be able to recognize these areas, and then you're going to use your trigger lines. And they're going to let you know if the area is likely to stop, have the potential to break, or if it's broken. And the recipe is really easy, guys. And I'm going to come back to the live market here, what's happened this morning. And I want you to see something. Remember when I said you would understand where the market is likely to go? Hey, good morning, PFI. Long time no see. Odds favorable momentum pushes the market down. There's one of those tails. There's one of those tails. It reaches Fibonacci resistance. And guys, here's your recipe. And it really is. It's the easiest recipe ever. You just have to go study it a little bit, commit it to memory. The first thing is if price reaches an area. And why? Because this is where the people that move the market know about, have targets set, might enter, may fight. So when price reaches the area, guys, when price bars get down to an area, whether it's down to resistance or down to support, up to resistance, down to support, when price reaches that area, it sets off the decision-making process. The only thing that you have to do when price reaches an area Let's put a little 1 by this one because I want this order of operations. First, it has to reach the area. If it doesn't reach the area, man, that's a target. Once price reaches the area, all you have to do is ask yourself, where are my triggers? If they are above support, support may hold. If they are below resistance, resistance may hold. And guys, it really is that simple. When price reaches the area, and we'll do it right here, and the trigger lines remain above, this line may stop the market, whether it is a fib, whether it's a 1-to-1, whether it's a divergence low, divergence high. It may create a big old bounce. It may stop it completely and reverse it. I want you to accept something on day one. I don't know what the reaction will be, so I choose to not trade into, excuse me, areas. Guys, this is your safeguard. This is the most broken rule ever. So if price pulls back to Fibonacci resistance, no more long trades. If price pulls back to Fibonacci resistance, the triggers remain below. No more long trades. If price pulls to Fibonacci support, triggers remain above. No more short trades. Can you guys give me a Y in the room if you're good with this? This is the most basic form. Price reaches an area, where are my triggers? If it's above support, don't take a trade. And guys, the cool thing is, it doesn't matter what color these lines are or how they were made. It's exactly the same if I turn it pink. If price reaches a line, the triggers remain above, don't trade into it. If price trades up to a line, the triggers remain below, don't trade into it. Don't get caught up on what line is it, right? Don't get caught up on, is a thin fib not as strong as a thick fib? Price reaches, that's it. Guys, this is your termination condition. I'm going to share that link real quick. And I'm going to give you guys the link in the room, but I'm also going to go to my 101, and I'm going to drop this in here. And I'm going to say, hey, you know what? Let's add termination conditions to the mix. Here we go, term to the mix. So I'm one picture smarter now. And not just because I took a picture, but because I wrote the recipe, right? I know exactly why it's a termination condition. So everybody's good with that, right? And you said it's happening right now in crude oil. I don't have any indicators. You guys want to see how easy it's going to be to recognize patterns? Probably a mid-band right there. Probably a mid-band right there. Probably a fib or a mid-band right there. Do you see that big gap back to the large triggers? This pattern becomes important. Let's put some indicators back on and see what it looks like. And while we're doing that, I want to go back to the picture. And I want to talk about when an area is broken. So everybody has this picture, right? Did I drop that in the room? Maybe I didn't. Let me make sure that I put this one in the room. There's your termination conditions. Clearly defined one picture. So let's erase some stuff. And let's show you what happens when is an area broken. So this is a term. Everybody's good with that. This is a termination condition. I need to pump the brakes. I need to wait a minute. I need to see what the reaction is. So when is the area clear? When both the small and the large triggers, when both the small and the large triggers get past the area is considered broken. Morgan, they've been having challenges with it. So guys, when price reaches the area, Ellie, when price reaches the area, hey, no ma'am. Price reaches the area, the triggers remain above, it's a termination condition. When the small and the large get below the area is considered broken. And I want you to see this. That area, support, behaves as resistance. So what was once support now is resistance. Once the trigger lines break through, guys, and then guys, there may be Rhythmic's been having challenges the last couple days. I don't know what they are. If your stuff's not secure, just simulate, have some fun. And it really is. Trade-Avate's is 100 million bajillion times better, says Cam. And actually, even Apex told everybody to switch to Trade-Avate. I don't know why they continue to keep Rhythmic. So guys, we know it's a termination condition if price reaches the area. When the small and the large break through, the area is considered broken. Does that make sense, everybody? Are we good with that? What was once support behaves as resistance. And once we're clear, guys, we're looking for momentum. There's one of those tails. There's one of those potentially high probability trend trades. So now we have our areas. And check it out. There was resistance, and it pulls back to the triggers. And there was that mid-banded support, and it pulled back up. And sure enough, there was a mid-band. This is how you're going to recognize patterns. So this is with your indicators on there. Let me get rid of the ones that I drew. Resistance stops the market. It breaks through support, pulls back to it as resistance, comes back down, bounces off of support, pulls back to resistance. Rule number 2 keeps you out of the long trade. Rule number 2 keeps you out of the long trade. Rule 1 and 2 keep you from hoping that the short trade works. Look how resistance holds it, guys, almost to the tick. There's that divergence low. There's that divergence low. There's that resistance high. The only thing Rule 2 is really doing for you guys is it's saying, hey, the path isn't clear, right? Let's let the small and the large get below the area. The area is now clear. If I don't reach another area, I'm going to look for trades. But rule number 2 keeps you out of the untradeable bounce here, guys. So is everybody good with that? It really is pretty simple if you allow it to be. Lines on the large chart can cause problems. If price reaches a line, where are my triggers? If I reach support, triggers are above, no more short trades. If I reach resistance, triggers are below, no more long trades. I have to be patient. It's either broken, small and the large to the other side, or it's not. Is everybody cool with that? Guys, this is the easiest of the absolute easy. Don't overthink it. Just learn to respect it in the beginning. Because your ability to understand this concept is going to open doors for your first medium probability trade. And a medium probability trade means that most of your indicators agree for the trade. However, a small issue exists. Your first medium probability trade that I'm going to give you a solid plan for is what we call a 50-50 trade. And it means that 50% of your triggers have absolutely smashed through the area with odds favorable momentum, and 50% have lagged behind. 50% through, 50% not. What does that mean? That means that I don't have a clear path because the small and the large haven't broken through. But because of momentum, odds favorable momentum can break areas. Guys, this is an area with the potential to break. It's just potential. There's the potential that a plane may crash through your roof right now. I hope it doesn't, but it's just potential, right? We want to make sure everything is cool. We want to make sure there's not a plane above us. We want to make sure that we have all the other advantages. So when you have this 50-50 look, guys, it's going to be imperative that you not sacrifice momentum on either chart. It's going to be imperative that your entry area is the best of the best, and we're going to talk about how to pinpoint that, but this will be your first medium probability trade. This is going to create a lot of opportunity. Most of your trades are not going to be perfect. but your ability to read charts is going to help you manage them aggressively. So, one more time, my favorite picture. Price reaches an area. Yellow 1-to-1s. Triggers stay above, no short trade. It's easy. There is no, I hope it breaks, I want it to break, I wish it would break. Maybe it'll break this one time for me because I'm kind of a big deal. Just simply don't do it. Guys, this is it. And then it bounces up to resistance. And the triggers remain below, and gosh, the recipe works again, right? Keeps me out of a loser both directions. I've got a green trigger and a red trigger. I can't have momentum. It's impossible. No trade. Triggers are still below resistance. Triggers still don't match. Then I hit one of those mid bands and the large triggers are a full bar away. That gap back to the large triggers tells me that price is likely to snap back to it. Price returns to the large triggers, guys, all day long. All day long. Look at this. Price returns, right? Price returns. Here, price comes back into it. Price returns to the large triggers. Price returns to the large triggers. This becomes important when we talk about entries and why there's 3 triggers on the small chart. Price returns to the large triggers, so we don't go long and try to fight that gap. Eventually, after about 45 minutes of either patience or of you guys blowing out your accounts because you got bored, that's the 90%, guys. This is 90%. Waiting for advantages to come together. Eventually, I get that momentum that I need. And when I have that momentum, I'm looking at the most current bar right at the top of it, and I'm saying to myself, it hasn't reached resistance. Resistance is becoming a target for me. And I also say, well, they're all above the old resistance, and now it's behaving as support. My path is clear, and we're about to learn right now how to pinpoint where that tail is most likely to form. And guys, this is your 10%. This is your highest probability trend trade. This is the trade that's going to bore the shit out of you in the beginning. Pardon my French, because all of you want to be active. All of you believe that every tick in the market belongs to you and you need to get paid by it. The reality is when there's not a statistical advantage, guys, when your rules don't line up, when they're not met, when the advantages aren't present, I watch people blow out $500. I watch people lose $1,000 of opinions. I watch people down $5,000 because they have to trade a 25 lot on simulator because it inflates their ego, right? This right here, this easy, high probability, wins more than it loses, everything perfect trade is about $450 worth of profit right there. How much of that profit are you going to keep? Is it going to undig the hole you already created by breaking your rules, by not being patient? Or is it going to go right into your account and maybe buy your kids something nice for Christmas? That's a choice that you're going to have to make. You're going to have to learn how to be patient. You're going to have to scroll back, and I want you to do this with me. Let's open up that large chart again. Weak triggers at resistance and the market reverses. Directly into support, look at the bounce. Divergence low to the tick, and the market starts back up. Resistance to the tick, and look at the big push down. Triggers don't break the divergence low. Weak triggers up here, there's a push. Large triggers don't quite break the divergence low, sets it off to the upside. Guys, go back and just do this. You're not even taking pictures. Resistance holds to the freaking tick. Resistance holds. Support holds. Divergence low. Resistance. I didn't draw these lines in, guys. Pulls right back to support. Mid-band. Large triggers are a full bar away. Do you see what I'm doing? Guys, this is still today's market. And I'm catching all of these examples of termination conditions saving me money. I want you to do this weekend. I want you to go back this weekend, and I want you to see how often rule number 2 is going to keep you out of problems. I wonder if this is going to behave as resistance. My small and my large broke through. And then, Pete, do you notice how I have a tail both directions? in this little green body, guys, I don't trade tails. I'm going to show you how to pinpoint the most likely spot for that tail to form if this becomes a down bar. I'm going to show you how to pinpoint the most likely spot for this tail to form. And we're going to do that using that refinement chart. We're going to do that using a smaller, faster chart. And we're going to let rule number 3 get us in on that smaller, faster chart, guys. And rule number 3 says that I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. That's rule number 3. The way lines on the large chart create problems, lines on the small chart are going to create a bounce. And Morgan, I think I noticed something about your trade. So this is a pretty good one because I really did like your trade. Just one challenge with it. On the small chart, guys, write this down so you don't get confused. We're going to use fibs, we're going to use mid bands, and we're going to use yellow 1-to-1s. Oh, look, and the fact bot's coming in and giving me definitions. How do you like that? So we're going to use fibs, mid bands, and yellow 1-to-1s. Yellow 1-to-1s. Let yellow ring in your brain. And we're going to use them at area. That we're going to have them inside of triggers. So rule number 3 says that we're going to let the large chart tell us that the market is going up. We're going to use the large chart to say that we have momentum. We're going to use the large chart to say that the path is clear. 66% of our advantages are coming from the large chart. We're going to let the small chart, and then this is going to help you out, Pete. We're going to let the small chart show us a pullback. And the pullback is what the small crowd does. When the large crowd says we're going up, the small crowd fights and gives a pullback, a retracement. This is how the wick is formed, guys. This pullback on a smaller, faster refinement chart creates that wick if the market continues in the direction of the trend. So we're going to use a pullback, and we're going to let that pullback come to areas. Fibs, mid bands, yellow 1-to-1s. Not pink 1-to-1s, yellow 1-to-1s. And we're going to make sure that those areas are tucked inside of triggers. And there's 2 looks on the triggers. And this is going to answer why are there 3 triggers on the small chart. Do you guys remember when I started circling on the large chart just how often, let's see if we can bring it up again, just how often price seems to pull back to those triggers. It pulls away and it pulls back to the triggers, right? It pulls away and it pulls back to those large triggers. Pulls away and it pulls back to those large triggers. So what we did, I say we, what John Novak did is he said, hey, price tends to correct to the large triggers. Price comes back to these moving averages on the smaller, faster chart. Price comes back to these moving averages on the slower, larger chart. So let's put the large trigger from the large chart onto the small chart. And what are we doing? We're making sure that the correction point where we expect price to retrace to is one on top of the other, that the price lines up between the 2. And that's the idea of favorable large triggers. Favorable large triggers mean that your synthetic triggers, which are just the triggers, the large triggers from the large chart, are in line on top of 2 snakes riding piggyback with the triggers on the small chart. My correction point is right on top of each other. It's overlapping. I expect price to come back to these triggers, guys. I don't expect these triggers to stop the market. That's why we put areas inside. I'm sure you could if you wanted to. Why would you want to, though, Pete? Because it doesn't matter if your area is in the large or the synthetic. It doesn't matter if it's the native one or the synthetic one. When they overlap, they're favorable. You're going to reduce your risk. It's going to make life easy. When they begin to spread, I don't know if it's going to return to this one or that one. I'm telling you, 2 colors won't do anything except confuse you. You're just adding more bells and whistles where the bells and whistles aren't needed. So what are triggers? Triggers are where we expect the price to correct. But we're going to shove an area inside of those triggers to give it something to bounce off of. So how does the tail form? We don't trade tails, guys. At the very top, I'm going to show you a couple different things with this because it's Friday and I'm going to slow roll and we're going to have fun. In the live market, price is up here at the very top of this bar. And there's odds favorable momentum and there's a clear path. And the very top of this bar is where you guys are going to wait for the pullback to start. And then on this large chart, price is going to pull all the way back, but I don't know where it's going to stop. So this whole pullback, I want it to hit an area inside of favorable large triggers. And then when the market goes back up, this bar is formed. So Pete, we don't trade the tails, right? We don't jump in at the top. We pinpoint with areas inside of favorable large triggers exactly where the market is most likely to bounce, most likely to continue. And guys, the window of opportunity, as we call it, that area inside of favorable large triggers, this is what creates reduced risk, and this is what gives you room to get to that profit target. If your pullback is 5 ticks from a fib, you haven't reached that fib. But by the time you enter on the pullback, you might have $250 worth of profit potential. So when the large chart says go, when the large chart says that you have momentum and a clear path, you're going to wait for a reversal bar on the smaller, faster chart. The reversal bar is not your entry, ladies and gentlemen. The reversal bar is not where you hit sell or buy. The reversal bar says, hey, let's find those triggers. Let's find those favorable large triggers, one on top of the other. And I'm telling you right now, it doesn't matter if it's the large or the synthetic. It doesn't matter if the large is above the synthetic or the synthetic is below the large. When these trigger lines are one on top of the other, this is the best of the best, and I have the least amount of space for areas inside. So get in the habit of finding your triggers. The tighter, the better. And Pete, you could make those any color you wanted. You could make them purple and blue and pink and yellow, and it doesn't matter because when they overlap, life is good. And then when you have fibs, midbands, yellow one-to-ones inside, this is where the market is most likely to bounce. So this second box is your window of opportunity, that point where we expect the market to return, to bounce, and to continue with the trade. And this becomes your entry for the highest probability trend trade that you can take. So reversal bar, find your triggers, find the areas within for a long trade from the highest point of support to the lowest point of support is your window of opportunity, that point where the market is most likely to continue. Areas beyond the triggers, beyond the correction point, are not a part of the equation. By the time the market gets down here, I don't want to be in that trade anymore. I've gone beyond not only where it should correct, but also where it should bounce. In a short trade, because we trade futures and we can make it both ways, guys. Awesome, Mike. You can still use NinjaTrader, Morgan, but have their browser trader open so that you can close the position if NinjaTrader gives you fits. Everything on the large chart says down. Everything on the large chart says strength. Everything on the large chart says clear path. And guys, we wait for a reversal bar on the small chart. We wait for it to go up. And I had the question yesterday from a gentleman. He said, but Mark, the market's going up. Don't I want to buy? But Mark, the market is going up. Look at the green bars. Don't I want to buy the market? Guys, the large chart leads the way. And this is, I want you to put it on a coffee cup. If the large chart is strong and there's nothing in the way and everything says up or down, good morning, Mario. This is just a little fluctuation on a small chart. This is a tiny blip on the radar. Reversal bar starts the process, not the entry. Trigger lines tell me where I expect these bars to get to, where I expect price to get to, not the entry. The line inside, fibs, midbands, yellow one-to-ones. This is where I expect the bounce. And guys, if there's only one line in there, guess what? Your window of opportunity is one line wide. You're going to activate a limit order 2 ticks below it, and you're going to hope for the best, right? You're going to activate a limit order 2 ticks above it, and you're going to hope for the best. And guys, this is your best of the best entry. And the cool thing is once you know where the market is most likely to continue, and Morgan, this would have paid dividends for you yesterday. Once you understand where the market is most likely to continue, you know where the market shouldn't go. And that's your initial stop, guys. 4 or 5 ticks beyond those trigger lines. 4 or 5 ticks. Oh, you've got to do it to learn it, though. You've got to break rules to learn them, guys. You've got to go and make mistakes to get the feedback, to get the lessons, and you're less likely to break them. So you guys get bummed about losers. I get excited about losers because I know that you're better for them. So understanding the entry, 3 rules, right? 2 charts, puts you into the market where the market is most likely to continue. You are literally going to sell the market on its way up. You're going to buy the market on the way down. No, Mike, I am so freaking ballsy and confident in what I'm doing. That limit order, as the market is trading up to me, I'm going short. And I'm going short with the understanding and the expectation that this mid-band is going to make it bounce down, that these trigger lines are going to be my little area, and that if it goes beyond that, I don't want to be in the trade. Why am I doing that? And we talked about this yesterday, and this is kind of cool. Because if I enter the market right here as it's coming up, I know exactly where it shouldn't go, right? There's my risk. If I'm entering the market before it gets there, my risk is in the same spot. But guess what? My profit potential has decreased a lot. If I wait over here, all I've done is rob myself of profit potential. So guys, in the beginning, you're going to freak out and you're going to jump in early. You're gonna break a rule and you're gonna jump in at the triggers and not the area. You're gonna try and figure out what the hell you're doing and you're gonna jump in all the way down here. I thought he said let it go and hold it. Where are my triggers? And it's okay, make those mistakes, but post them in the room. But once you understand, once you take, guys, give me like 5 days, you'll be able to find this window pretty easy. You understand where the market shouldn't go. Your management plan begins. And once it begins to go in the direction of the trade, guys, you can reduce your risk above that bar. And here's the deal. If it's terrifying, and it is for a lot of people, to sell the market on the way up or buy the market on the way down, wait for the reversal bar. That confirmation is going to cost you a little bit, but at least you know everything's doing what you want it to do. Your risk is established and it's going in the direction. And guys, that's okay too. But eventually you're going to build the trust to get in where the market shouldn't go. And once it goes in the direction, you'll be a tick below a reversal bar, a tick or two above a reversal bar. And what you'll find is that your ability to pinpoint, even on the ones that don't work, it's not uncommon to see you guys losing 40 or 50 bucks a contract instead of $200 to $300 a contract, hoping that the market goes up from where it shouldn't. So guys, this high probability trend trade has got to be your focus in the beginning. And I want you to see something. And this is into a termination condition, but I want you guys to see with the momentum, the reversal bar, and the trigger lines aren't together. I have 2 correction points, but it just so happened to bounce off of the line that's inside of the triggers. And if we back up, and I circle this tail with the potential to break. I don't trade the tail. What am I looking for? I'm looking for a pullback to a mid-band right inside of those triggers. Do you see it? Guys, this is how you're going to study. Go back and circle tails. Do they line up with the resistance inside of favorable large triggers? Darn right it did. What about this one? Holy smokes, it happened again. Guys, this is crude oil. This is me not creating pictures to try to sell you on something. This is me going back and circling tails and you seeing how those tails line up inside. And then, Pete, do you notice how this line happens to be inside of the synthetics? The large are overlapping, but this one happens to be inside of the synthetics. Let's see if we can find one where the line's inside of the large. And this is why I don't think changing the colors creates an advantage. This one's right at the large and the synthetics. Favorable. What an easy entry to grab hold of, isn't it? Pretty outstanding. So guys, my hope for you is that you allow it to be simple. Hey look, support broke, behaved as resistance, and down it went. Not the easiest trade to catch. And that's okay. So my hope for everybody, if you're a brand new user, I want you to do something for me. Especially this weekend. That's okay, Morgan, you're developing trust right now. I'm giving you guys this, and I give it to you every day, and for whatever reason, none of you believe me that this is going to help. So, whatever. Do your own thing. Guys, if you want to get to where you want to be, you've got to be able to recognize some pretty simple patterns. You've got to be able to recognize just a couple advantages. Sorry, Paul, some people will and some people won't. And once you start to recognize these patterns, it slows it down. And then Gary's right. We'll read that in a second. So go through this weekend, guys. Dedicate an hour or two of your weekend. Hell, crack a cold beer. Pour a glass of wine. It's okay. Take 25 pictures of strong triggers so that you never miss out on strong triggers, right? And Paul Flowers, it pays huge dividends. There's such an advantage. If you take 25 pictures of strong triggers, guys, I want you to see this. I'm going to click through. Let me pull this off. There's my first picture of strong triggers. And I talk about why they're strong triggers. I talk about what the advantage is, what rule it connects to. But if I do this, that strong trigger look is this strong trigger look. And that strong trigger look is this strong trigger look, which is this strong trigger look, which is this strong trigger look right on the first bar. And guys, I'm telling you right now, I've already done 30 of them for you. Does anyone believe that if they go through and take 25 pictures of strong triggers, that they're ever going to wonder if they have strong triggers? And then if you know that's your advantage, go take 25 pictures of weak triggers. Go take 25 pictures of when there's no separation. Take 25 pictures. Look at the reaction. Guys, there's no way you're going to go back and skip this or take this one. You're like, hold it. That's weak triggers. I know because the small are inside of the large, because it's a loss of momentum. Anything can happen. And if you go through and you take 25 pictures, guys, it's going to be 25 pictures of the same damn thing. Weak triggers at support. Look at the reversal. You're developing trust. You're developing trust in the advantages, and you're developing recognition when those advantages aren't present. And you're going to do the same thing for a clear path. When is a path clear? When both the small and the large triggers get beyond the area, that path is clear until you hit the next area. So take the pictures. Don't just take them. Talk about the whys. Why is it strong triggers? What does it mean to me? What rule does it associate with? Go through and do that. And guys, I promise you, I'm going to tell you right now, I'm going to put I don't know what the guarantee is. If you do this exercise, it's going to absolutely change your world as a trader. It's going to turn you into a chart reader. You're going to begin speaking to yourself in terms of advantages. And Morgan, on that same token, look at these strong triggers. And what did it do? Hell, it went all the way to resistance. Look at these strong triggers. It went all the way to support. Look at these wonky, ugly triggers, and look at how it dances. Strength pushes. Guys, what you're doing is you're developing trust. And Morgan, that's going to be part of your management plan, is learning to trust the long triggers eventually. So, Rob, tell me something. You need to get better with the intermediate looks. Do you need the intermediate looks to make $300 a day? If you've studied the high probability trend trade enough, guys, you know that you should have no problem making $250 a contract a day, even $100 a contract a day. Get great and get consistent with the best of the best first before you try to add. So if you're good with the easy 101 looks, perfect, right? Shut it down. Go do something fun. Once you get good on the easy looks, and Rob, you're absolutely right, that's when you're going to start adding the next look. So I dropped the chart reading 101 in the room for you. As you create recognition, as you create recognition, check it out. This is a termination that reversed the market, and that's a good top or bottom. And it reminds you, you don't have to have a good top or bottom, but guys, it does create a little extra giddy up. This is exactly what strong triggers look like. This is exactly what weak triggers look like. So there's no excuse. There's no, oh, I need to be in class for another month before I start doing that drill and taking pictures. I just gave you guys the cheat sheet. This is what a termination condition looks like. There's the rules for it. That's what a broken area looks like. There's the rules for it. And then Rob, here's your intermediate. Go take 50 pictures of when the market has the potential to break and see how often it doesn't break. And you'll begin to trust the idea that you need it to be perfect. And guys, here's your window of opportunity, the whole order of operations to be able to set it up. Nice job, Morgan. So guys, I dropped that in the room for you. Download it, go get it, steal it, take it, use it. And now I'm going to give you a high probability trend trade checklist. Guys, you can print this out and put it on your desktop. Police yourself every time you take a trade, every time you're looking for something. Go through this checklist. Write these rules on your chart. And make sure that you're following your rules as a brand new user, that you're recognizing advantages. I've never had anybody use this checklist to the letter and do worse than 70%. Ever. And guys, remember, the goal is to win. You'll have to manage it eventually. And that's where the final document comes in, guys. And I'm going to give you this one. This is your KISS plan for the high probability trend trade. I'm also going to give you a KISS plan for the 50-50 trade. Rob, that'll be for you as you look for those medium probability trades. But this is a high probability trend trade plan, guys. This plan is a stepping stone. Stepping stone in your learning journey. This plan isn't the end of your journey. This plan isn't the only trade you can take. This plan isn't all you'll ever see with the indicators. This plan is the best of the way, designed to turn you into a chart reader, but it's going to optimize your chances of success with the high probability trend trade. You're going to have to simulate, and you're going to have to study, and you're going to have to get feedback, and you're going to have to practice, and then you're going to create your own plan based on your ability to read the indicators, guys. You're going to say, man, I've been focusing on momentum. I've been focusing on no termination conditions. I've been focusing on getting in at the area inside of favorable large triggers, but I keep seeing this other pattern. It's such a pattern that I'm going to create my own plan based on that pattern that I recognized while I was looking for the best of the best. And guys, I'm telling you, it's going to happen even if you don't try. So this is your simple plan for consistency, guys. Don't fight the large chart. Don't fight the large chart, guys. Don't fight the large chart momentum. It's the entire large crowd versus you, right? And that's a bar fight you're going to lose. Don't fight the large chart termination conditions. Guys, this is where the people that move the market are reacting. And Paul Flowers, we all have to learn that lesson, don't we? Don't fight the large chart. It rarely works out. And here's the pain in the ass, guys. Pardon my French. Sometimes on Fridays, I get a little colorful. If you find it offensive, let me know. I'll stop. Sometimes, where's my large chart? Sometimes those jerks are going to smash right through a termination condition and you're going to take an exit, and you're going to say, man, I got paid at trouble, and they went. And you're going to say, well, now I guess I have to trade into every termination condition, and you're going to lose, 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 and you're going to be like, man, this is crap. It broke for me that one time. Rules are developed, guys. Rules come to be on thousands of pictures taken by myself, taken by John Novak, from countless hours of study, from validating and proving that when you have a termination condition that reverses the market, it 100% creates an advantage for you. When you have strong triggers on the large chart, it 100% creates an advantage for you. When you have no termination conditions present, this is your best of the best, because we never know if an area is going to hold, break, or create a fight. So we have a recipe to keep us out of that decision-making process. And we know through study exactly where the market's most likely to continue with this trade. All you have to do is study it enough to create faith in it, to create a little trust in that entry. And guys, if you give me 30 days focused on the highest probability trend trade, if you give me 30 days of waiting for the rules to be met on the large chart and waiting for the reversal bar on the small chart, 30 days of when you get that reversal bar, identifying your triggers first and your areas second, and saying to yourself, this is exactly where the market is most likely to continue. I know it, I've seen it, I believe it. Let me activate a limit order at the bottom of that window and sit on my hands and do not a damn thing, because I'm not in charge. And if that small crowd gets me back to my limit order just below the area, look at this, I'm selling the market on the way up, then I'm in a trade with every advantage. I'm in a trade that wins more than it loses. I'm in a trade that has been proven, that has been tested, that has been validated. And guys, I want you to go back with this KISS plan and study it historically with the goal of proving me wrong. I want you to say, Mark Novak is a snake oil salesman. This plan will never work, and I'm going to follow this to the letter to prove him wrong, and let spite drive you if that's your thing, guys, because what happens is you're going to be with me forever. Once you get this recipe down, you're not leaving me, because you know that you found the golden goose, guys. Don't turn it into fried chicken. Once you have your entry, you got to manage it. You got to do something with it, right? So Morgan, you're getting really good at these entries right now. And now we have to take the second bite of the elephant, guys. Now it's the second piece of the puzzle. Now we got to do something with that great entry. And great entries create very manageable trades. So your management should be very mechanical, the same way your entry is in the beginning. As you learn to read indicators, your management doesn't have to be home runs. It doesn't have to be aggressive. All you got to do is get paid, because getting paid creates confidence. So as you grow with the software, your management plan will change, guys. But until you're a chart reader, keep it a series of if-thens. If I get into the market, I'm just going to open all four of them. It's easier. If I get into the market where the market is most likely to continue, Paul, if I get into the market where the market is most likely to continue, I have the advantage of momentum, I have the advantage of a clear path, I have the advantage of getting where it's most likely to continue, and my stop is where it shouldn't go, guys. 4 to 5 ticks beyond that window of opportunity, and I'm 100% okay with the idea that I may not win this trade. I'm 100% okay with the idea that that small crowd might have eaten their Wheaties and they may push up and stop me out. And I'm cool with that, because I'm going to take the same trade every time and I have a statistical advantage. But I also realize that with all of those advantages in place, I'm more likely to get a reversal bar in the direction of my trade than I am to just get run over. And once I get that reversal bar, the only thing I can do, and guys, this is what I want you to do while you're on simulator, I want you to embrace this very mechanical, and don't do anything other than the very mechanical. Don't let your emotions step in. Your new stop is 2 ticks above the reversal bar, and there is nothing to do until it either hits the target or hits your stop. You're not in control of that. Again, with all those advantages, it's more likely to hit the target. And if it hits the target, guys, your first target's at $100. Because getting paid creates confidence. Because getting paid is the goal. I want you to get used to winning. I want you to get used to being successful. I want you to get used to great entries. I want you to get used to the results that they yield. It's the process. And once you hit $100, guys, you're going to go break even. You're going to remove all fear from the trade. And you're going to hold for your second target. And your second target is only $200 in the distance, guys. Your second target is that's it. It's $200, which means that with your great entry, right? With your conservative stop movement, you just made $300 on the highest probability trend trade. You didn't worry about anything. Everything was mechanical. And if you do that once a day, guys, that's a $1,500 week and a $6,000 month and a $72,000 year roughly. Have I dropped this in the room before? About 1,000 times, Paul. About 1,000 times. And if you come to the spreadsheet, and Gary posted this, I want to read this right now. Gary said, and it's brilliant, his recommendation is to go into the example trade tab and look at the trades posted, and you'll see correctly executed trades. Copy them and see how the rules were applied. Mark them up. It'll accelerate the learning curve. So thank you for that, Gary. So check it out, Mr. Flowers. There is the entry sequence short that we just went through. There's one long. There's your very mechanical, guys. I'm telling you, this spreadsheet is an absolute gold mine for you. Look at this, perfect trend trade short. What does that mean? Odds favorable, clear path, pull back to resistance inside of favorable large triggers. Guys, study this look. This is what it looks like, right? We're not getting in on the reversal bar. We're not jumping in at the triggers. We're getting in at the area inside of favorable large triggers. Open it up. Look at another one. High probability. Let's do this one. Alyssa's perfect short. Alyssa's not even in the room anymore. Odds favorable. Clear path. Pull back to resistance. Money, money, money. So guys, that's the goal. Go back and study these things. Recognition comes through repetition. And the more you try to bypass the pieces that create success, the more you try to just find the money instead of the advantages that create it, you're gonna spin your wheels, guys. Embrace the KISS plan. That's the KISS plan for the high probability trend trade. I put it in the room for you. Guys, I've had people use this KISS plan and get funded on those trading accounts in their first 30 days through strict adherence. Once you can do it, you can start taking that 50-50 trade. Why? Because you understand termination conditions. Whoops, how did that happen? You understand termination conditions that reverse the market, a good top or bottom, create an advantage. You understand momentum because of the high probability trend trade. You know what it looks like even on a small chart. You know what it looks like to have divergence print. All of these things going on, guys. All of these things going on, that very basic lesson that, you know what? If I can just become comfortable with momentum, a clear path, and an entry, it's going to open every door that I want to open as a trader. So don't put the horse before the cart. Learn the high probability trend trade. There's the KISS plan again. When you're good at it, when you're successful with it, include that 50-50 trade. That's your second step. Guys, I'm going to give you my spreadsheet again in the room in case you didn't download it in the very beginning. I want you to steal that. I want you to take that chart reading and those high probability trend trade checklists. There they are again. I'm also going to give you the PowerPoint that I use to teach this classroom every day, guys. Every day I tell you guys I'm going to give you everything that you need to be successful. I'm going to give you everything that you need to be successful. The only thing you need to do is put in effort and ask for feedback. So I'm going to ask real quick, are there any questions about the high probability trend trade? Are there any questions about recognizing strong triggers? When you have strong triggers, have you seen it enough to believe that you can sell a pullback to an area and ride that wave of momentum down to the next area? Telling you guys, all you have to do is build a little bit of faith and a little bit of trust, and you're good. Awesome, Daryl. So if I were going to sell resistance right here, Paul, I could right click below that midband and I could activate a limit order. And now if the market pulls up and reaches that area of resistance inside of favorable large triggers, it's going to put me in a trade. But I should only do that if my rules are met. Does that make sense? And then once it hits support, I take it off the table. And I wait. I say this support is either going to hold or it's going to break. I'm not sure yet. So I'll be patient for just a second. Maybe I'll go refill my water and come back to the market in a second and see what's going on. So guys, I know that was very soapboxy, very preachy. What you'll find is that I'm a colossal pain in your butt because I want you to be successful. And the easiest way to do that, guys, show me what you're doing. Tell me why you did what you did. Tell me what got you into that trade. Show me where you got in. Show me where you got out. And tell me why you got out. And guys, I'm going to tell you, sometimes the answer is going to be fear. Why'd you get out of that trade, Mr. Flowers? Because I was scared to death of losing. Talk to me about that one. No, so it won't. So Paul, if I have an order waiting, why on earth do I need stops and targets? I'm not even in the market. Right? But here's the deal. ATM strategy, let me close this out. The ATM strategy says that if I get into the market with a limit order, I'll have a 12-tick stop. So if I get into the market with a limit order, come on back and get me. As long as my ATM strategy is set, come on, now I have stops and targets once I'm in that market. And my rules aren't met for a high probability trend trade. Well, actually, they kind of are. There's the top of my window. That one's probably not going to work, but it's okay. My stop was right in the right place and it got me out. So what's cool is you don't need those stops and targets if you're not in the market because there's nothing to stop or to reach. But as long as you have your ATM strategy in place, Paul, the second you enter, even if you just jump in, even if you just hit sell market, it'll put those stops and targets in place. So pretty cool, right? And it overran a little bit, but we did have momentum and a clear path. And if I need to put this above the fib instead of below the fib, because really, who's expecting to go below the fib? There's my $100. So I take one off at $100 and I move to break even. And now nothing to do. It either hits my second target, which should be at 38 in the S&P, or there it is. Or I get stopped out. But with momentum and a clear path, guys, check it out. I might have had to take it twice. I didn't trade the tail, right, Pete? What I did is I looked for the area of resistance up here by the triggers. So, guys, that's what we do every day. It's the same thing every day. Awesome. And Rob, it's easier, right? Because let's be honest, guys, if you're going to be so stinking good that you can pinpoint where the market is likely to continue, why on earth do you want to sacrifice that extra money? Why not just wait for it? And you will be that good, and you will have that confidence with a little bit of practice. So I'm going to take a break, guys. I'm going to take 5 minutes. I'm going to stretch my legs. When I come back, we're going to start looking at everything. Morgan, man, my brother wrote the software. I have all the fibs. On the S&P, or was it the S&P you're asking about? You don't have this fib? So there's a couple reasons that it could happen like that. Morgan is... Were you looking at the wrong market? Yeah, I switched to CL. So this is the S&P, and then I bounced over to crude oil. I'm quick, man. I'm like a bunny. You got to keep up. So guys, that's the first hour. First hour every day. Every day. Let's focus on advantages. Guys, get to the point to where you speak to yourself in terms of advantages. Do I have odds favorable momentum? Guys, give me a Y or an N in the room. Let's show you how easy this is to do. Odds favorable momentum? Anybody? No. Do I have a clear path? No. So what does that mean? Sell, 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 sell. Oh my gosh, I sure hope it goes down. Let me put
Order filled.
76 contracts, hoping that this nonsense works out for me. No.
Order
I simply say, you know what, guys? My rules aren't met. I'm going to sit on my hands. I'm going to do nothing. I'm going to wait till it's freaking perfect. Because when it's perfect, it's effortless. When it's perfect, it's easy. When it's perfect, it's calming. When it's perfect, that's where you guys develop confidence. And then guess what? Once you get good at them being perfect, you start saying, well, you know what? That resistance with all the triggers below it, it might hold. All of my triggers are down, that might hold. I'm definitely not going long. Let's see what the reaction is. Maybe eventually I'll find a pattern that gives me an entry that's outside of the best of the best. And it's a process, guys, but once you understand the very basics, once you understand the idea that this is a termination condition, and look what happened at it. Stopped it cold, bounced off of it again. If you were hoping that this area broke, ignoring rule number 2, you got stopped out. You gave money back. You traded into an area that may have stopped the market. Allow it to be easy. Allow it to be focused. Speak to yourself in terms of advantages, and you'll always be looking for the best of the best, and you won't have to hope or wish or want or pray. So, you guys can watch this termination condition bounce for a minute. I'm going to walk away. When I come back, it's all chart reading, guys. And just, you know what, let me give the Friday disclaimer for you guys that are new. And I apologize to anyone that's like, man, this guy's on a freaking tangent. Some days I get that way. I don't mean to. But the key to everything that we do is having a foundation. Everything is about having a foundation. Everything is understanding these very basic concepts that we all try to skip out on. I don't want to learn about momentum and a clear path in an entry area, Mark. How do I get paid? Well, you get paid from momentum, a clear path in an entry area, not the other way around. So have that foundation, understand the basics, and then each day and week you're going to get a little bit better. You're going to see a little bit more. You're going to recognize patterns. So for you new users, and this is important to remember before we get into chart reading, I blanket with very conservative rules, guys. It's 100% on the recognition of advantages. It's a very solid plan that optimizes your chances of success as you learn to read the indicators. And so for new users, for you guys that are brand new with me, for my Iron Mikes, for my Morgans, for my, let's see who else we have in here, for my Jeffries, right? Who else is new in here? I know I've got some of you guys. Don't be shy. Doug. Guys, so for you guys, termination conditions are bad. Don't trade into termination conditions. Daryl, don't trade into termination conditions. I'm not telling you what to do, but I'm telling you as a brand new user, I tell you that they're horrible. I tell you that not having momentum is just absolute crap. And I try to instill in you that when you don't have an area inside of favorable large triggers, it's financial suicide to take that trade. Why am I doing that? Because I want you to feel confident. I want you to find success. I want you to have the best chance of success as you learn to read your indicators. They're not always bad. I'll say that right now. Termination conditions won't always stop the market. There's going to be conditions that will allow me to trade into them. Not having the best momentum, same thing. Or even like we saw here, when I don't have the perfect entry, I'm going to learn how to wait for confirmation. And as you grow with the software, guys, the more time you spend with it, the more you're going to see. And you're going to see people in this room taking trades that don't fit the high probability trend trade rules. Don't be the trade police. Understand that they're in a different spot. They've reached a place that you're not at yet. They've created an understanding that you're in the process of creating. So if you post it in the room and it's not a high probability trend trade, we're going to go back to momentum, clear path, and entry area. And this is what we're going to discuss in every chart. We're going to talk about what you saw, why you took the trade, where you entered, and my whole goal, guys, is going to try and elevate you a little bit as a chart reader. And if there were opportunities for less risk, if there was opportunities for more profits, we're going to explore those as well. Don't be the trade police. Eventually, you're going to get right where you want to be, but learn the foundation first. Guys, I will be back in 5 minutes. We're going to have a good day, babe. All right, guys, I'm back, and I'm just doing this little annotation. Just doing this little annotation. Some of you got excited. The market's been going without me. The market's been running. The market it just keeps going down. It's got to stop, right? And if you did your chart read, you said, hey, these are those weak anything can happen triggers. I definitely have a clear path, but I don't have any areas inside of favorable large triggers. I don't have any correction spot. My correction spot is down here. And once it gets beyond that, guys, I don't know if it's going to go to this mid band. I don't know if it's going to go to this fib. I don't know if it's going to retrace up to this fib. The reality is, with this look on the triggers, guys, I don't know what it's going to do. Does that make sense, everybody? This is just a chart read. It's not a trade. This is where you have two choices. You can say, I'll take it anyway because people know me. I'm kind of a big deal and I can bend the market to my will. Or you can say, rules not met, no trade. These are your options, guys. You got run over if you jumped in at the mid-band, right? The fib held. Rule number 2 said that it might. So, but we didn't know which one it's going to be. I want you to embrace that idea that you don't know, guys. And that in the beginning, if you just focus on advantages, you are going to miss trades. You are going to get into the market. You're not going to get into the market. You're going to have all of these things going on that you have to process. And if you allow it to be really simple, either rules met or rules not met, you'll be amazed at how easy life can be. So Morgan got us going here, and let's talk about it. So the first question is, there was a divergence in this area before, but not on the 5-1 charts. So I want to address that first, Morgan. Divergence means, and this is for everybody, that if price goes up and then comes back down 3 bars or so, if there's a loss of momentum, this divergence will print. That's all divergence is. It's just a loss of momentum. But the divergence on the 13-2 chart is based off of the 13 chart movement. So it won't show up on a 5-1 chart because the 5-1 chart is going to have its own divergences because it has its own pivots. It has its own fluctuations. Does that make sense, everybody? The same is true for these 1-to-1s. These 1-to-1s are 100% unique to the chart that you see them on. The difference is on the large chart, the fibs, guys, and I'll show you exactly what it is. When you open up your software, when it runs all of its calculations, when it creates these fibs, it creates them for every time frame. Your highest chance of success comes from what Nexgen has done for you, and that is put fibs from your 5-1 chart, fibs from your 21-3 chart that most of you don't even see. It knows to do the calculations, and then fibs that are native to the chart. You're going to see these 3 fibs. The skinny ones that don't extend right are from the 5-1, the fat ones that don't extend right are the 21, and then the thin ones that go all the way to the right, these are natural. These are the 13-2 fibs. So what happens is we use the lines, right? Price reaches an area. And that's why we use the lines on the large chart, because there's going to be different potential stopping points. So these divergences, these lines, these will remain active until they're no longer needed, Morgan. So sometimes you'll see it gets above it, it'll stop printing. But until the rules are met to pull it out of play, that line will continue to remain. So great question. That's a good one. I've seen these lines last for like 7 hours, 8 hours, and then stop the market cold. Let's see if we can find an example of that. I like going back and looking at the charts because I think that there's so much information on them. That line stayed in play for an hour and a half. There's a pretty good one that held for a really long time. I want to find an example of one that's been there for a while, and that's where 10:23 a.m. and that is 4 p.m. and they created a bounce right there. So pretty good stuff. That's an awesome question. Thank you for that. I'm gonna tell you guys right now, the questions you ask make this room so much better. So the large triggers never passed, the area never broke, right? But the small triggers did, Morgan. And this had the potential to break. Would you agree? Smalls are through, large are not, momentum, everything's set up. And it just didn't break. And the area holds. And then it reverses and it's coming down. And you do have odds favorable momentum. And that's a great read. Perfect. The one part that you kept out of it though, Morgan, is you didn't talk about your path. You didn't talk about rule number 2. Do you notice that you didn't reach that divergence low yet? That you didn't reach the one-to-ones, that you didn't reach Fibonacci support? And both small and large cleared the previous area. So can you give me a why if you recognize you have odds favorable momentum and a clear path? Man, that's the best of the best. That's a sexy large chart. So rule number 3 says, and this is the lesson that you're going to take into the weekend. And I want you to see this. Oh, right on. So you are going to enter at the 50-50. When you say the 50-50, are you talking about these little pink dots? Cool. No such thing. So, and let me show you why. 50-50 is a term that we use on the large chart. And what it does is it identifies areas with the potential to break. Does that make sense? And no, the termination conditions are on the large chart. They identify areas that may be problematic. And Morgan, this is what I think got you. And guys, for everybody, these pink one-to-ones are small swing one-to-ones, and I wish John Novak would stop putting them into the templates. If you're trading gold, if you're trading crude, if you're trading the S&P, tune these things out, guys. You don't need them. Small swing one-to-ones, let me show you just how, I'm like, where's my internet? We're on it. Small swing one-to-ones, guys. So let's look at the large swing one-to-ones are taken from big old swings. They're 100% Fibonacci alternates, and it's not coming up. Come on. Heaven forbid the pictures show up. There we go. Large swing one-to-ones are these big swings in the market. Guys, these are significant. On the large chart, they can stop it cold. The people that move the market look at these. Even on the small chart, these large swing one-to-ones are pretty significant on a smaller, faster chart. And we can use them. Let's see if we can find an example. We can use them for entries on the small chart. We can use them to identify those places for a bounce. However, the small chart one-to-ones, small swing one-to-ones, those magenta ones, guys, these are taken from tiny little fluctuations, right? If you're a NASDAQ trader and your large chart is a 34, these small swing one-to-ones are huge. If you're looking at a 5-1 chart, the way we do on crude or the S&P or something like that, these small swing one-to-ones, in my opinion, they're just worthless. There's too many fluctuations that create them. I'm looking to see if there's a way to turn those plots off. There may not be a way to turn those plots off. But I wouldn't be opposed to anybody in this room just learning to ignore them on the small chart because there's too many of them. There's too many of them that come into play. If they line up with an area, wonderful. If they don't, just leave them alone. Look at them. 1, 2, 3, 4. They're everywhere. It's just too small of a swing. Does that make sense, Morgan? And everybody in the room, really. If you're a NASDAQ trader, give them some credit. Any other market where you're not using a big old time frame, just don't worry about them. And I know that's hard. I'm telling you to ignore something on your chart. So, and that's difficult to do. So that lesson, and one of the things that happens is every morning, guys, when I say the areas inside, I always say fibs, right? I always say mid bands, And I try to be very specific on yellow one-to-ones. Paul, get with Jason. But when mine is struggling, I do a full clean out, 100%. I delete everything and start fresh. That's what I do. But get with Jason. That's always tech guy. They're here. They're here for you. So what? So Morgan, does that make sense on this? Because I think you also use that for your entry, right? You use those pink one-to-ones for your entry. Cool. So just mental note. Yellow one-to-ones are the only one-to-ones that we're using for entry spots. So your window of opportunity on this trade is actually right here, not here. And I see how that would have been confusing. And now your entry makes sense. It makes sense to me. But the flip side is you would still have to have a stop outside of that window of opportunity, right? So this is kind of a fear. This is fluctuations, and it's okay. When this bar started going up, you more than likely said, oh shit, I'm going to lose this trade, and jump ship, right? Or you had your stop a little arbitrarily placed. You're still in the window of opportunity. And this is what's hard for new users. As long as I have odds favorable momentum. See, so where do you have a rule that says, okay, so 2 ticks above, though, is the correct stop after the reversal bar? Make sense? So here's where you'll get, Morgan, and this is where everyone will get. Good morning, Miss Debbie. When you have this look on a large chart, you'll get to the point to where if you're in at the best spot, wild horses are going to have to drag them to your stop because it just doesn't get any better than this. And remember that what happens in one bar on the large chart is like 15 to 30 on the smaller, faster chart. So in this one bar on the large chart, right here, look at how many bars. Look at how much there is going on the small chart on just one bar. And guys, this is a pretty big deal because this is where new users get tricked out of trades. This is where new users forget that the large chart leads the way. This is where new users get so caught up on the fluctuations on the small chart that they start to panic. And watch this. And I'm not saying this isn't rules based. Watch how often this number changes. Whether it's red, whether it's green, whether it's 50, whether it's 25. And the whole time it's just one bar doing its thing over here, right? So you're going to see all of these fluctuations and you're going to be like, oh no, I'm up, I'm down, I'm winning, I'm losing. It says this, it says that. This was here, that's this color. When the reality is, guys,
Order filled.
When your chart, the large chart, says I'm screaming to the downside with nothing in the way, don't get focused on the fluctuations. Focus on the entry and then let your management be very pragmatic. Dude, it's a great trade. It's an awesome trade with some wonderful lessons. And I love that you added in there. Market ended up going up to touch resistance and then tanking back down to the next support. Lesson is don't touch the stop loss. So what you did is you created the perfect lesson for yourself in this one. And that's what it did, right off of resistance inside of favorable large triggers. Oh, thanks, Muser. Pretty cool, right? And look at it after the fact. Isn't that beautiful? You nailed it. You had it dead to rights, Morgan. You knew exactly what you were looking for. We're just going to refine that entry, work on holding that stop, and it never even blinked until way the heck down there. Great trade, dude. And then this one, you do take the right entry because you know it's the area inside of favorable large triggers. So let's read it. Odds favorable? Yep. Technically a term. Technically it's a termination, but to hell with that, I'm going to break my rules anyway. What does it mean you're not aiming for a high probability trend trade here? Are you suggesting that it's a medium probability trend trade? Because one of your advantages is gone? And Morgan, it's perfect. So it is a termination. And because you're speaking to yourself in terms of advantages, you knew that it wasn't high probability trend trade, which means what? You may manage it a little more aggressively. No divergence, great recognition. Since you're giving up the clear path, you're not sacrificing momentum. Brilliant. Even with the term, you saw that we had a pretty good momentum. Nevertheless, you waited for the pullback, as you should, to the area inside of favorable large triggers, keeping in mind that you were never going to keep the trade past the fib, even if it went further. Market was having a rough time. There's those fluctuations, right, Morgan? It was having a rough time, and it chickened you out. You took this as a cue to start poking around for an exit? Hell no. Protect your investment, but let it do its thing, because right here, it's finally starting to do everything that you want it to do. And I like this one. You took this trade with the knowledge that oftentimes when you see the market bounce off a fib with a lot of momentum on the large chart, it'll often return and retest at the same price or slightly lower. All right, so Morgan, I got proud papa moment right now because you read your large chart. And your large chart told you that we're screaming to the upside. And let me see, I made this picture yesterday. And you took this lesson that when it's absolutely screaming in, it's more likely to retest. And you took rule number 3 and you had the least amount of risk with the most amount of space to go back. And then now you're just going to have to work on the reasons to exit beyond fluctuations on the small chart. So Morgan, you got 100% gold star today. Great chart reads, great execution on this one. Absolutely perfect understanding that it wasn't perfect, and you managed it aggressively. And it all stems from your ability to recognize momentum, understanding that there wasn't a clear path, and then taking a great entry to minimize your risk and give you the most room to run. So, nice job, Morgan. Any questions about any of that feedback? It was brilliant. I love it. And then Jen says, this area has the potential to break, but it's not broken. So because it's only potential, Mark, I'm going to insist that there's no divergence. I'm going to insist that I have strong triggers. I'm going to insist on the area inside of favorable large triggers. And I'm going to take quick profits because it's not perfect. Jen, beautiful. And then once again, Jen is saying, you know what? Potential to break. Everything's down. The triggers are strong. There's no divergence. They're strong. He left them all in Dallas. If I trip over them, I'll pick a few up for you, Morgan. Beautiful entry right inside of favorable large triggers. And Jen, you get paid. And Jen, are you just changing tactics to $100? No matter what, if it's not perfect? Which is okay. But this is one of those ones where I might wait a little bit. Good looking trade. I like it. $100 is great. Are you trading one contract? Okay. I love it. You have a plan. Cool. You're on sim. So guys, one of the reasons that I teach with, with 2 contracts is 1 contract gets you paid and confident, right? Yeah. So Jen, we're doing, let that second contract do its thing as you build a trading plan. Ellie, baby, stop. Nice job. And then finally, I like it. You're like, you know what? I got in, I got out. It's slow. I have my plan. I'm all good. It's still a 50-50. And now there's divergence. So I'm not going to take this trade. Jen, just outstanding. It's so simple, isn't it? Momentum, perfect entry, easy to get paid. Momentum, perfect entry, easy to get paid. Momentum, but it sucks. Loss of momentum, I'm not gonna, easy to not get paid. Easy to not lose. Great job, Jen. Pattern recognition, that's it, right? Rules. Jen, if you don't mind me asking, how long do you think it took you once you got focused on the basics? Was it a year? Was it maybe 30 days? How long does it take to just go, all right, when I pull all the nonsense out, now I'm starting to see more. And everybody's different, about 30 days. Everybody's different. But guys, I'm telling you right now, 30 days of focused study, you'll have a plan that you can make money every day with. It's just whether or not you follow it. So, good stuff. 330 days. You know what? That's okay too. It probably took me 330 days because I kept fighting it. I kept trying to not take pictures or participate in class. I didn't have rules. It probably took me at least 330 days before I started getting good at it. Well, yeah, you're better than I am. You have the benefit of hearing all the screw ups that I've done and how to avoid them. All right, Joel says, everything is up, the path is clear, all good. That's a late entry. Played it cautious, just increased your risk and reduced your profit potential, but did a great job getting paid. Nice job, Joel. Patience is the key. That's why I think my wife would be so good at this. She's married to me. She's got to be the most patient lady in the world. Nice trade, Joel. Way late on the entry. But that's okay. With all those advantages, it worked out. All right, Zorro, large chart says 50-50, no divergence, pullback. Guys, this is a beautiful one. Thank you for this, Zorro. When the triggers are split, do you notice how he waited for it to correct back to the large triggers? And then enters, and everything still says up. Little loose on the stop there. But one divergence, he's like, I'm cool with this one. Let's just hold it and get paid. Zorro, really nice job there. And then GWC, you've got a couple of them. I'm going to kind of multitask on you. She didn't. Watch this, Paul. Odds favorable momentum, without a doubt, right? Is there a clear path? Not yet. So let's go back to this bad boy. Hold on, where's it at? I love this. This is my favorite tool. No clear path. But she did have an area inside of favorable large triggers. So what she knows without question, Paul, and guys, this is that 50-50 trade, and Jen did it beautifully, is that when I don't have a clear path, doesn't it make sense to insist on momentum being perfect, right? I've already given up 33% of my advantages. Doesn't it make sense to make sure that momentum is great? Doesn't it make sense to make sure that my entry area is perfect? So what she did, Paul, is she said, look at this. My smalls are above the large, not below the large. Divergence is a loss of momentum. I don't have momentum, and I don't have a clear path. I choose to skip this trade. And this is huge. And when I go back to, and when I give you guys this plan for the 50-50, when I give you guys this plan for the 50-50, Paul, coming from a good top or bottom, coming from a termination that reverses the market, this increases the likelihood of success tenfold. Momentum on the large chart, momentum on the small chart. This is imperative because we're not sacrificing momentum. Look how it says no divergence, and if so, I'll enter at the area. And then it reminds me, don't trade if there's divergence, and then it tells me again, if divergence prints, exit the trade. So just based off of that, what do you suppose is the number one killer of 50-50 trades for new users? If the KISS plan is designed to optimize your chances of success, guys, losses of momentum on a 50-50 are the biggest reason you guys are losing these trades. So don't do it. And that's okay. You're still learning rules, right? Focus on the best first. You'll get to the 50-50. And then GWC is going to put on a clinic for us real quick of how you can begin to change. When a termination reverses the market, that's a good bottom. When there's strong triggers on the large chart, life is great. And when they're this strong on 3 different charts, GWC knows, hell, I can jump in with that momentum and just ride it until it goes away. GWC, beautiful trade. And he's just momentum. That's it. Momentum, clear path. I told you guys, once you understand momentum and a clear path, you will find opportunities. And you're absolutely right. Exact same look the other direction. Once you find momentum and a clear path, life becomes easy for you. And then GWC, I just want to make sure you know that you don't have synthetic triggers on your small chart. But you're absolutely right. Great opportunity to take it down to the trouble. Nice trading. Momentum and a clear path for the win, guys. Momentum and a clear path. I wonder how many times I can say that until I start to believe it. Momentum and a clear path. Momentum and a clear path. Cool. Paul W., your trade plan says that when there's a termination condition, sit on your hands and do nothing. I agree with your trading plan. That sounds like a very solid way. Bad top, divergence, 50-50. Okay. Bad top with divergence, so you've reached your trouble spot. No divergence, strong triggers, pull back to the mid-band on a 50-50. Andy, this is the perfect medium probability trade. And the beautiful management, not hoping for a home run. Very solid, Andy. And then there's that same momentum and a clear path. Mr. Flowers, you say, let's rock it. Momentum and a clear path. Momentum and a clear path. This is not a high probability trend trade. Why is this not a high probability trend trade? Paul Flowers? Yeah, you killed it, Andy. No Uggs, man. All right, so the rules for a high probability trend trade are odds favorable momentum. You had it, right? No termination conditions. 100% true. Large chart says go. Rule number 3 says that I am going to buy a pullback at an area inside of favorable large triggers. Rule number 3 does not say just jump in. Does that make sense? And this is nothing more than a language thing, Paul. So if you say, whoops, high probability trend trade, I'm going to show you why I'm talking about this. And I'm not knocking it. I'm not knocking what you did here. But if I'm in a high probability trend trade, it's going to take a second lower divergence to take me out, hitting my target, or 3 divergence, right? So I have a very specific plan for what it's going to take to manage a high probability trend trade. Does that make sense so far, everybody? If I take a trade where I jump in hoping for momentum to carry the market in my direction, I have to GTFO if momentum goes away. 2 very different management plans, right? This is, Paul, this is jump in and hope for the best. That's all it is. It's jump in and hope for the best. But when you have odds favorable momentum and a clear path, and you are not on the wrong side of these small triggers, the best tends to happen a lot, and you got out right at trouble. This is just a little chunk of life here, guys. Ron C. pretty much created this trade. A lot of you guys are trying to copy it, but you have to understand what you're in so you understand how to manage it. That's the only point I'm making here. I love this trade, Paul. But if you think it's a high probability trend trade and divergence prints right here, it could push all the way down to there. Does that make sense? So knowing what kind of trade you're in, oh, I hate that word, okay. It doesn't make sense, but you want me to stop talking? There is no pullback. If you're going to have a pullback, Paul, you're going to see a reversal bar. That's a pullback. What you have, no, this is a one tick fluctuation in price, Paul. That is a one tick fluctuation on a small entry chart in price, not a pullback. So this is great. Language is huge, man, and this helps a lot. Paul, you took a beautiful trade, 100%. And as long as price isn't closing on the wrong side of these triggers, you can ride that wave of momentum for as long as it carries you. But I just want you to realize that the only thing that this trade has going for it, or the reason you're in it, is momentum and a clear path. So once one of those things go away, you just have to have a management plan. And you did it perfect. I mean perfect here. I love this trade. But you have to have it in your head that if I jump in right here, and jump in, I use that word a lot, and I get a reversal bar right here, my expectation instantly shifts to these areas down here. And I either have to keep my stop way the hell down here, or I just have to get out on the loss of momentum and wait for the next best trade. It's just a jump in. That's all it is. And that's not a negative. I'm not saying jump in a nasty tone. I love this trade. Look at GWC's trade. Brilliant. It's the same trade. Brilliant. What a great way to make money with these indicators. It just takes a little more. You got to be a little quicker on the management side. So great job, dude. I love it. I love everything about the trade. I just remember when I talk about you need to be able to know what you're doing so you know how to manage it. That's all that lesson was. Is being able to know why you're entering so you know how it needs to be managed. Let me figure out where I am here. Hold on. I lost my spot. I think that was yours. Okay, cool. So Zorro, we've got two of them. And then GWC. So Zorro says, everything is strong. Let me take a pullback to the mid band with no divergence and get paid. It's not an accurate entry, but you're using the line inside of triggers, Zorro. You're using the only line inside of triggers. You know where your stop has to go, and yeah, maybe a little early on the exit. But you got paid, and that's the goal. And then you didn't get the bounce on the momentum style, so you waited for confirmation, and you still rode that wave of momentum all the way up to trouble. And that exit could have been a little earlier with the loss of momentum. Great job again. And then GWC, termination. What is the reversal bar marker significance, GWC? And you're doing great, Mr. Flowers. And GWC, maybe you're not in here anymore. So the reversal bar marker I'm using when price reaches like the mid band and the large triggers are a full bar away. So as you come into support here, if my triggers were above the reversal bar marker, it comes into play. All you have right here is a little bit of overrun, 3 divergences in the same price range, and your first shot at going short if this is a little bit of overrun that's going to reverse the market. It's a good look, but I don't believe that the reversal bar marker has much significance in that trade. If you want to come in and tell me what you were using it for, we could probably turn that into a lesson. All right, Morgan. In at the top of the window, odds favorable, everything down, top of the window, out at the 1-to-1. I like this one. It blew through the 1-to-1s. Let's talk about something real quick, and this is kind of cool. I think we talked about this yesterday, and guys, this is a new concept for me. And let me know if this makes sense. I need feedback from you guys on this so I know if I'm doing it right. So if we wait for the reversal bar for the pullback, right? I have to have this complete bar to start the process of looking for an area. Does that make sense, everybody? And that bar closes on the other side of an area that I'm hoping creates a bounce. I think it takes that area out of the equation. Which means that you've moved right up to the perfect entry, which is exactly what you did. And then that second higher divergence, you get paid at the 1-to-1s, which I love, especially with the smalls coming up and the large rolling. And this second higher divergence is an exit condition anyway. So freaking awesome job getting paid on this one, Morgan. Good job. But I've been noticing that if it's dissecting that area, I'm looking for the one above it. Same way here. It's dissecting this area. I'm looking for the one below it. So great job. I like that. Nicely done. And you clearly have momentum. You clearly have your entry areas. So Morgan, you and I are going to talk a lot about management. We're going to have a good time with it. Let me figure out where I'm at here. Andy, Jen, did we get you? Guys, if I ever miss one of your posts, please let me know. Odds favorable, everything screaming down. Sell the mid band, out a couple ticks above support. I can't find any fault with that. Really nicely done. Mr. Flowers, that was happening in crude. I'm not sure what it was. Andy, there was your first trade, managed it. Everything is down. It's a little wonky. You get in and out. They knew exactly where your stop order was. So Andy, do you remember when we were talking about this one live? Once your areas get beyond the correction point, you just don't know where it's going to stop, right? There's nothing that's safe. Because without strong triggers, without areas inside, right, you're giving up momentum and your areas are falling beyond. Once it goes past this fib, you don't know how far it's going to run. So getting in at 75.9 and getting stopped out at 76.6. So you gave it 7 ticks on the overrun. That's cool. But it does feel like they know exactly where your stops are, right? Because the guys that have been doing this for decades go, you know what? The average guy is going to get scared right around $70, right around $50. Let's go up to 70, take all their money, and then drop like a brick. Good picture. But once your areas fall outside of favorable large triggers, management becomes much more difficult if you just jump in. All right, GWC. Great bottom, termination reverses the market. This adds all the fuel to the fire that these areas are potentially going to break. And with that no divergence, strong triggers, area to bounce off of, GWC really makes it look easy. You've been making it look easy all day, GWC. I love it. And then Paul, weak top, nowhere for you to go. Let me sit on my hands and do nothing because I can't find a rule met. I love it. Not a good top yet, just a termination condition. And then it reverses everything, and there's your pullback. Beautiful, and down it goes. So in 2004, Nexgen taught a trade that when a fib reverses the market, sell the pullback to the small triggers. And GWC, you have absolutely nailed that look so often today. Great job. Great job. Guys, if you're new and you have a question about anything that I'm saying, please raise your hand and ask. It's okay to not understand every word. It's okay to not understand every word coming out of my mouth. Nice work, Paul. Because it feels like a lot to take in. GWC, did you notice that this didn't, I mean, there's not a line there, but it corrected to the large triggers and it never blinked, right? This is an awesome idea that it's going to continue down. It hit the fibs, it reacted to the fibs, and none of your momentum indicators said that anything changed. These are the ones where maybe if I find a really low risk entry, I may take it from off those triggers, especially when I'm coming from that termination condition up there. That's just the first fight that the sellers won. And then my favorite phrase, momentum for the win. Momentum for the win. Somebody needs to get their dear old aunt to put that into a pillow. Momentum for the win. What a great phrase. Oh, we saw that one. Sorry, guys, I'm getting lost a little bit. And the one thing that I didn't say is Paul says, I've gotten tremendous help just doing the strong triggers. Great job. And GWC, gauging the fight, and the sellers won. And then Ron said momentum for the win because he believes in it. And Iron Mike says, you know, when a termination reverses the market, that's pretty cool. Rules not met, smalls inside of the large, not a clear path. That's okay. Rules met. What does overlap mean? Not overlap. Okay, so you're focused on those favorables, right, Mike? Not yet, Jen. Maybe I should. I'll tell you what. Free OFM tattoos for anyone in the Dallas area. I'll knock them out for you. So Iron Mike, I wanted you to see this. So this termination, these triggers rolling, everything going down, no divergence, strong triggers, tiny window, not high probability trend trade, but I'm telling you right now, Mike, you will take this trade eventually based on everything going down. And then you wait for the next one, and they're not overlapped. And this is where language pays dividends. If I expect the market to correct either in this area or this area, this one doesn't have any lines in it, right, Mike? That area is out of the equation. This area, however, is very clearly defined. Does that make sense? So at least your brain says, hold it. Let me wait for the synthetics because they have lines in them. And then you still might say, well, since it's not perfect, I want a little bit of confirmation to get me into this trade. And you wait for a reversal bar. And that's okay. But I'm telling you, if you understand what the overlap is, the overlap is two correction points in the exact same spot. Does that make sense? That's the best. Split triggers is 2 correction points. Well, so let's go through the rules. The rules say that I have to have a line. So if only one of the areas has a line, well then you ignore the other correction point, right? Does that make sense? I don't need this one. Yeah, and the rules weren't met, so rules not met, not my trade. But this lesson is about what the triggers mean. The triggers mean correction point. The triggers mean I expect price to pull back to them. I expect price to pull back to them. So the expectation of triggers. Let's do this because there's a big difference. The expectation of trigger lines, we'll say the large, is that price will retrace to them. That's all it is. That's the only expectation. Has nothing to do with really anything. And then rule 3 says I have to have a line inside of the triggers. So don't even worry about this, right? But if we talk about the expectation, when they're one on top of the other, your expectation spot is that big. When they're split, your expectation spot is this big. That's the first lesson on entries I want all you guys to get. And then when we start to break down and dissect the rules, Mike, I know that I have to have lines. So now my expectation for a bounce point turns into this area. So we go from very broad to narrow. If there was a fib down here, I would say there's no way in hell I'm taking that trade with split triggers and areas in both, right? But once we eliminate one of those expectation points, then you can kind of focus on this one. Does that help a little bit, or is that confusing? Sometimes I'm going to confuse you guys. It's okay to tell me. Because what you'll start to notice is that, and this is just kind of a big down, but price pulls away from the triggers and back to the triggers, right? Price pulls away from the triggers and back to the triggers. So what we're doing is we're just putting that, we're making sure that the correction point on the large chart and the correction point on the small chart are in the exact same spot. And that's your best of the best, right? That's the best of the best. And the large chart looked better. You're absolutely right. Here it didn't look great. Here it looked outstanding. And here, you'll learn to break your rules eventually. I love that you didn't. And here, you'll be able to use the language for your rules to understand that that's really the only spot you're looking for a trade. So you could cut this one out of the equation. That's a little more advanced. You'll get there. But this one, do you see how the language helps you pick where the market is most likely to continue? That very simple idea that you need areas inside of triggers, it eliminates all the indecision down here. And it puts all the focus on this one little spot. It's a great large chart read, and your patience is awesome. Cool. And it took me 3 years to finally figure out that language. Iron Mike, so don't feel like you have to be a pro in day one. It took me that long to get the gist of what the triggers really were and what they meant for me in my trading. And I'm just passing it on to you guys so you don't have to wait 3 years to have that advantage. Great picture. And then Miss Debbie, I bet you it's a pullback to resistance. Knows where the stop goes, gets out at trouble, gets out with divergence, back in because the rules are still met, gets out with the second higher divergence, sits tight, waits for the mid band, stops keep you safe, finish the move all the way down. Debbie, nice job. A little outside a high probability trend trade. You're just trading that strong trend and doing it absolutely beautifully. Nice done. Nicely done. 0 trades today, Paul? So go back and see if you missed something, right? So if you have 0 trades, go back, look for tails, and circle them. Guys, if you have a day you're like, I didn't have my rules met once, go back and circle tails and make sure that you didn't talk yourself out of something. Nicely done, Miss Debbie. And then Rob, huge bar fight on the small chart. And it's right at the areas, isn't it, Rob? The drink exchange. What is this? When someone says bar fight in here, I always think about that day trading theme bar, drinks change price every few minutes. Oh, that's awesome. That's pretty cool. I'm going to leave that up and I'm going to go look at that. I've never heard of that place. Joel, odds favorable, everything says down, pull back to the areas inside of triggers and you get paid easy. Nice job. Iron Mike, we saw that one. The trade's so nice you post it twice, right? It's a bar. That's awesome. What a great idea. I hope that's in like New York or Chicago by one of the exchanges. That's brilliant. Guys, so Rob talks about the bar fight, right? Where'd that picture go? And all he's talking about, so when I talk about the bar fight, for me, I'm talking about advantages versus disadvantages. I'm talking about, and let's go through this, right? Oh, no worries. Appreciate that. I fall behind some days, Mike. I'm not the sharpest tool in the shed, but I usually get there. How would you justify getting into these shorts? That's the part that we didn't cover on this one, Iron Mike. But let's do the bar fight thing real quick. So, Iron Mike, termination that creates a reversal is powerful, right? That's your drunk lineman. Portland, Maine. Odds favorable momentum, right? This is your buddy that's a black belt and has no fear. Odds favorable momentum. Oh man, it pushes. Room to get paid. This is the kicker, but he's on steroids and angry right in the middle of it, right? And then the only thing you have are these split triggers, right? And one of them doesn't even have a line in them. So this is the captain of the Glee Club. And he needs a safe space right now. So when I talk about the bar fight, guys, this is what I'm talking about. Using just those very simple advantages. The termination that reverses the market is a huge advantage to any look for the short, right? And then when you couple that with momentum, it's outstanding. Because not only do they make decisions to go down, but they're pushing it like a angry bull in a china shop. And then when I've got an area inside, I just keep going, gosh, it just keeps getting better and better and better. And you get to the point where you're like, hold it. This one little thing isn't going to keep me out of this trade, not with all of these advantages. I'm going to take this trade and I'm going to ride that momentum and I'm going to get paid. And if you're a brand new user and you say rules aren't met, perfect. Absolutely perfect. But I want you guys to understand that just because you don't take this one, you're going to get there. You're going to be good. It just takes a little bit of practice and a little bit of recognition and a little bit of time. And the more you think about the advantages and you vocalize them. And guys, I talk to myself out loud when I trade all day long. I have advantage. Oh no, that's a termination condition. Let me look at everything to see what's going on. So, Mike, it's a great picture, and I do think that you could justify taking that second trade. I do think you could justify taking that second trade. And Andy, I think you could have justified getting in here, making all the money that you needed, and not having to take weak triggers, no areas inside of favorable large triggers again and getting stopped out. So that's twice. You guys remember when I said I'll find your thing? Let's just talk rules. And guys, I do this not for any reason other than you keep switching things. You keep calling your ex-girlfriend wondering why your new girlfriend's getting pissed off. No, you are not my worst case. Trust me on that one. Andy, do you have strong triggers? No. Do you have a clear path? Yes, absolutely. So right now, I am 50% of my large chart rules met. Andy, do I have, let's use the language just for grins, do I have an area inside of triggers? I'm not even going to say favorable large triggers. No. They're beyond the correction point. So, Mike, when I was going on this crazy tangent about where we expect price to correct, and if there's no lines in there, how could I ever expect the bounce? And if I'm beyond the correction point, who freaking knows where it's going to go to, right? I don't have any idea. So what you guys do when you start talking to yourself in terms of advantages, right? Andy, when you look at your chart and you say, well, shit, I don't have momentum. And you say, well, I do have a clear path. Let me at least make sure that I don't forfeit 66% of my advantages. Oh, sorry, Ron, I'll go over it. So, Andy, have a great weekend, man. You're actually going to come in on Monday. Looking forward to it. So when you talk about things in terms of advantages, when you know the language of your rules, and this is why I stress language, guys, when you know exactly what your rules say, when you know without question, Andy, that rule number 3 says area inside of favorable large triggers, your brain is more likely to say, oh crap, 66% of my advantages are gone. Let me sit on my hands. And the cool thing is, if you're hell-bent, Andy, on taking a short anyway, at least make it go in the direction, right? Yeah, maybe, Morgan. My wife just accepts it now. Actually, she's at her hospital, so I don't have to, she can't hear me. But does that make sense, Andy? If you're still pretty hell-bent on taking that short, at least wait for confirmation. We talk about these reversal bars a lot, guys. When it's not perfect, but you're destined to break your rules anyway, at least force it to confirm. Because how do you manage this one? There is no place where the market shouldn't go. It's already there at the time of entry. So, guys, we're going to keep working. And Andy, you're not the S in stupid. You're the P in perseverance, man. We're coming through and we're just getting smarter every day, guys. And every picture that you guys put in the room is easier. And you're absolutely right. How great is that one, right? And Andy, the fact that you backtracked and circled it and said, this was my trade, this wasn't, you're more inclined to catch that one next time. And you're less inclined to take the new one because you're like, God, I don't want to listen to Mark bitch. And they do, Andy, because the rules aren't met, right? Confirmation doesn't guarantee a win. All it does is it gives you a place to put your stop at least. And I think that's the big one, right? All confirmation does is it gives you something to put a stop behind. You will. Dude, Andy, I'm 4 years into this and I still have days where it looks like I've never traded because I start forming opinions. And then I have weeks and months where I can't find a way to make a mistake. So we're all human and emotion will take over every now and then. But the more adherence to rules the easier it becomes to follow your rules. Oh, Paul. There's a fight at the termination, huh? So triggers go in, overrun, you get that bounce, that anything can happen trigger bounce, and it cranks all the way up just below the fib, and the large triggers don't follow. And now we're super weak triggers, and the area isn't even broken. And Jen says, you know what? I'm just going to take a picture and not form an opinion. That's hard to do sometimes. Tricky contra trading, Zorro. All right. So can we have the confirmation talk again? Zorro, are you in here? And then Zorro reads backwards, and that's okay. So guys, I want you to see this. Zorro had a bad top, right? It didn't make it to the termination, and it pulled all the way down to Fibonacci support, and the large triggers didn't follow. You have to, Paul. You got to give it up to understand what it takes. And Zorro says, with the gap theory, is everybody good on the gap theory? And Zorro, I want you to correct me if I put words in your mouth. Zorro says that when price reaches an area, the large triggers are a full bar away, it's likely to close the gap to the large triggers. So Zorro went long at a fib. And this is where we talk a little bit, right? Zorro went long against momentum. Zorro went long against the triggers. Zorro went long against direction. Zorro went long against every freaking thing on every chart. Right, Zorro? Because you said, this one might hold because of my triggers. Let's see if it goes back up to it. So Zorro, remember when I told Andy, if you're hell-bent on fighting everything, a little confirmation goes a long way, right? A little confirmation goes a long way. Because the reality is I don't know if it's going to be the mid-band. I don't know if it's going to be this fib. Hell, I don't even know if they're going to make it all the way down to here. There's just no telling with everything pointing down. So if you're saying, wait a minute, bad top, gap theory, I know that it's going to be probably somewhere in here where that bounce starts back up. I'll wait for the confirmation as long as those triggers are a full bar away. And then from that confirmation, I'll try to get back up to those triggers. Does that make sense, Zorro? I love the trade. I'm not opposed to the trade at all. But I think a little confirmation when you've got so many areas where it could bounce pays huge dividends. Guys, this is not high probability. This is very much counter trend trading. And there's no reason to believe it's not going to stop and drop. So that little bit, guys, when you're going to start getting a little outside, when you're going to get a little aggressive, at least be on the correct side of these small triggers. Does that make sense, Zorro? Because that's your momentum phase. All you guys that are making money on those jump-in trades, if my small triggers are down, anything left of those triggers is the momentum phase. And that market's not going up until it closes on the other side. When these triggers are going up, that's the momentum phase. Anything on the left side is going to keep going up. It can't go down until it gets to the other side. Pretty cool lesson there. So what you do is you let the small chart get out of the momentum phase. And essentially it's starting the next one. So great job, Zorro. I'm talking with my brother right now, and I'm working on a lot of study of finding a way to really manipulate and capitalize on that momentum phase, whether it's not fighting it or whether it's holding that trade until you get to the wrong side of it, and you'll be amazed at how it works out. So good stuff, guys. We made it through all your pictures, everybody. Nicely done. Nicely done. And here I have odds favorable momentum. And here I have a clear path. Wait a minute. And I've got a mid band right at the very top of the correction point. How quick was that read? What do you think, Jeffrey? Does that make sense? Smalls below the large, larger wide, absolutely nothing in the way. Didn't even need my reversal bar yet, right? If I find my triggers, they're from here to here. And there's only one line right at the top of them. Pretty cool, right? Man, that was fast. Jen, it came down to create that. Look at that divergence low to the tick. That's an ugly look. I'm sitting on my hands. All right, so bonus points, ladies and gentlemen. I hit 1-to-1s on the small chart. Is that a termination condition? What do you think? Are 1-to-1s a termination? No. Where do we find termination conditions, ladies and gentlemen? That's it. Just a large chart. Thank you. How'd you guys like that awkward silence? Pretty cool, right? My mid band is on the wrong side of my triggers, isn't it? It's past the correction point. And right now, Andy is like, I don't care. It's not like this has burned me twice today. I'm going to get in at the mid band. Let's see what happens. Divergence from the low, I definitely want a reversal bar. I've got tons of room if I get it. So I'm going to do this. I'm going to put a stop order in. I'm going to demand that it gives me a reversal bar. And if it doesn't, I'm never in the trade. And look at that. Andy, do you see it? Instead of just jumping in on the wrong side? If you said it has to give me a reversal bar, you're still not in the trade. Egads and little fishes, my friends. Egads and little fishes. And now you ask yourself, I'm on the wrong side of everything. My smalls are above the large. My large are starting to turn up against the trade. Andy, do we still want to wait for a reversal bar here? Or are we just going to say, you know what? Why don't we wait a minute and see what happens? I love it. I'm going to give you aha moments for the rest of your life. As long as you're in my class, guys, we're going to get smarter every day. That's the goal. But you have to know what you're looking for. And this is why I go back to it. You have to know what you're looking for. Once you know what you're looking for, it becomes easier. And let me see real quick. Before you ever sit down with, and let me change this, before you ever sit down with live money, you have to know what are your rules for entry and what do they look like. "101 chart reading drill." Right? What are your management rules for after you enter? KISS plan management initially. And guys, it depends on the trade. So we talked about this with Mr. Flowers, right? It depends on the trade. It's a huge variable. If you're taking a 50-50 trade, you may manage a little more aggressively. Maybe divergences take you out. If you're taking a high probability trend trade, well, then the only thing taking you out is a second higher divergence or hitting your targets, right? And if you're taking one of those jump in trades, well, then a loss of momentum is what takes you out. So guys, if you keep it simple in the beginning, if all you're looking for in the beginning, we haven't done this one in a while. This is the too many mind drill. If the only thing that I'm looking for in the beginning is a high probability trend trade, I have 3 rules and 2 charts. That's it. That's all I'm thinking about. When I add the 50-50 trade to the high probability trend trade, Now I'm looking at about 7 rules total. And I'm still on 2 charts. But if I don't know exactly what I'm looking for, I may mix up my rules. Awesome. Morgan, have a great weekend. Have a good day at work. Keep the bar fights in the markets. Amen. Thanks for being here this week. Dude, Morgan, I think you made me a better teacher this week. I appreciate it. No, 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 no. And then, guys, here's the deal. Once you add in that jump in trade, we'll call it. Well, now you still have to know odds favorable and a clear path, and you still need 2 charts, and you still probably have 2 to 3 rules for it, right? So you're giving yourself all this stuff to think about. You go from only having 5 things to think about to suddenly having 12 things to think about to suddenly having 20 things to think about. And what happens is the more you give yourself to think about, then the more likely you are to make mistakes. And when you make mistakes as a brand new user, um, it's a little dejecting, right? Losses feel like failures. Losses are not failures. Losses are very often just a normal part of doing business. Taking the right losses, right? Debbie says, when I have a termination that reverses the market and every indicator is pointing down, and I've got a mid band right there, she'll take that trade. So Iron Mike, when a termination reverses the market, and maybe it's not perfect, but it is on the small chart, maybe you'll find a way to take that trade. Maybe you'll find a way to capitalize on it. And that's exactly what Debbie did. Guys, is that a perfect high probability trend trade? Hell no. But there was enough reasons for Debbie to take this trade because of the great top, because every indicator is the same color, because tiny little window of opportunity, because of no divergence. And the more you spend with the markets, the more time you spend studying your indicators, then the easier it becomes. The easier it becomes to piece it all together. And Debbie's hiding charts from us. So if you took the confirmation, second higher divergence took you out. So guys, I think it's pretty cool. We do the same thing every day. We do exactly the same thing every day. We talk about the exact same rules every day. Your wife has no... Well, she's married to you, Mike. Mine either. My wife is such a badass. My wife spent 22 years in trauma, in trauma surgery. My wife is so much tougher and cooler than me. And she's married to me, Debbie, and that's difficult. If you've ever met me, I'm not easy to get along with all the time. And repetition every day, right, Jen? Thank you for putting that. Repetition, doing the same thing every day until it becomes easy. Do you guys remember when you played Little League as a kid? If you played baseball as a kid, and you'd go to the batting cages, and you would never run to first base, right? And you'd never hit a home run, and it was impossible to strike out. All you did was focus on connecting with the ball. And then when you took that practice and all those little bobbleheads are playing their pee-wee game, and that pitch comes over the plate, you felt prepared to hit it, right? When you go to the driving range and you hit a bucket of balls, you never get a birdie or an eagle. You never hit par. You don't bogey or triple bogey. All you're doing is working on the mechanics that are going to pay dividends when you get out to the golf course. And that's what simulator is, guys. Right now, simulator is you practicing recognizing odds favorable momentum. And simulator is you practicing making sure that you're not trading in determination conditions. And simulator is you practicing getting in at the right spots so that when you make that transition to live money, you feel comfortable and confident. Miss Debbie, have a wonderful weekend. Hopefully we get some nice weather this weekend. I'm not sure what it's supposed to be. Um, so guys, I want you to embrace simulator. And if you're on simulator and you went live, right? I'm on simulator. I'm doing great. I'm winning trades. I'm feeling comfortable. I'm going to go to Apex. I'm going to go to wherever and I'm going to test my plan. And then it turns out that you can't seem to follow your plan once there's a little pressure applied. It means that you don't trust your rules yet, guys. It means that you still put too much focus on the result rather than the process that creates it. So what I'm going to tell you guys is it's okay to go back to sim for a couple days to kind of get your juju, and you'll understand whether or not your challenges come from understanding or whether you need to focus on on yourself, if you will. And I'm going to give you this. Here's your Friday reading, guys. The Secrets to Emotion-Free Trading. Go read this. This will take you an hour to read, maybe. But it talks about so much common stuff that we go through as traders. Whether it's the fear of losing or whether it is not being accustomed to winning, not giving ourselves the repetition of learning how. It asks, are you trading in your own best interest? Guys, I love this book. I've read it like 3 or 4 times now. There's also this one. This is 24 years old, guys. This is 7 Habits of Highly Successful Traders. Because it is my personal opinion, and my opinion means squat, guys, that the patterns that I teach day in and day out aren't difficult patterns if you allow them to be simple. The rules aren't overwhelming at all. What's overwhelming is the desire to make money. What's overwhelming is the fear of losing money. What's overwhelming is believing that you know what the market's going to do. Guys, you never know what the market's going to do. We could have never guessed that somebody was going to drop enough money into the market to make it drop like a ton of bricks. But what you can do is begin to recognize patterns. You can begin to recognize patterns that happen over and over, right? So what's one of those patterns? When the triggers are a full bar away, the market tends to pull back to the triggers. There it is, and there it is, and there it is, and there it is again, right? And there it is again. So what I can say without question is that if price reaches an area and the triggers are a full bar away, I'm going to wait for that correction. And you start to piece these things together and you start to develop trust and you trade patterns. You don't trade with the belief that you know what's going to happen. Because all there are is ticks, guys. All there are is up and down ticks. And when you stop expecting to win every trade, you're going to start winning most of your trades. And when you stop caring about the result, but rather the execution of the method, the adherence to the rules that create a statistical advantage. And when you believe you know what's going to happen, guys, you set yourself up for failure when you take a loss. When you don't care what happens, the trade doesn't matter. It's a collection of 20 or 25 trades that you track, not one at a time. I did not. Elvis, guys, I will never reach out. Thank you for posting that, Elvis. I will never reach out and initiate conversations with you and then ask you for money. Nobody in Nexgen will. So if you get a friend request from me, chances are it's 100% scam. I'll send you a message, but I won't send you a friend request. The scammers will send you a friend request. The only people that are in my friends bank are the people that requested me. So absolutely, Elvis, you are 100% correct. Don't fall for it. Don't send people crypto over the line, guys. Because as long as people still do, scammers are going to keep scamming. So the 4 fears are being wrong, right? Losing, missing out, leaving money on the tables. And if you focus on your fears, guys, you're going to make them happen. Thank you for posting that in here, Elvis. That's a great reminder all the time. Um, it is. It's only 3 grand. Well, I'll tell you what, Elvis. You know this is me. I'll send you my address. Send me a check. Nobody can fix it. Nobody can fix it, Andy, because it's not just here. It's not a Nexgen thing. It's a Discord thing. It's an Instagram thing. It's a Facebook thing. It's a telephone thing. There's shitty people all over the world. And they will always try to capitalize on the good people. And as a good people, you just got to keep your guard up a little bit. I'm not a fan of scammers. Have you guys seen Beehive yet? That Jason Statham movie? That's a great movie on what needs to happen to scammers. Maybe something to watch this weekend. Kenny, I am just north of Dallas in Texas. Yeah, Jen, that's how I get my wife to watch. Hey, baby, you want to watch Antonio Banderas? She's like, okay, I'll watch the movie. Hey, baby, so and so's gonna have a shirt off in this one. Do you want to watch a movie? I'm all right. She shares a bed with me every night. Feel free to window shop. And if it means I get to watch the movies I want to watch, it works out great. Yeah, Elvis, I appreciate that you did that because that's never a bad thing for everybody to hear. Never a bad thing for everybody to hear. So, and there's the announcement John put in the other one. It's a scammer. Someone tried to steal my name and go through. I wouldn't do this. I reached out to know how the market have been treating you lately. I want you guys to look at that message and go, this illiterate son of a bitch is definitely not Mark. What else do you guys want to talk about? We're about there, huh? It's about time to go into the weekend. Yeah. But if I send them my bank account, they're going to give me $20 million for the $200 I send them. That sounds legitimate. It's crazy. It's crazy. I told my wife, I was like, yeah, but these guys only prey on the elderly. And she said, sweetheart, you are the elderly. And I said, no, I am.